So the first thing I'd like to do is go ahead and welcome each and every one of you to this today. As I said, it's a special time for you guys being the first group mentoring session. Some of my private mentoring students are in here as well this morning, but for the group mentoring, this is a great first opportunity for us. It's a new thing, and so we're trying to do some special things for you, as I've kind of mentioned to you that joined earlier. And also your feedback is going to go ahead and be very important to us as we go forward. Since you're the pilot group, we're going to be looking to you for different ideas to make things better. Some of those discussions we've already talked about, like I said earlier, were like a secondary chat room for you to discuss actual setups, indicators, different things of that nature, things that you've learned in these webinars to keep the information fresh and actually apply it then to your actual trading. So that amongst other things such as like the video recording and that, all of it's designed to go ahead and make this a highly educational, low-cost solution, which fits with, as you know, the my charter, my mission statement for the company that I formed for just this reason. So with that said, the first thing I'd like to do is go ahead and pose a couple of polls to you to get a feel for all of us, and you'll all see the results of this. I think we'd all be interested in hearing this. I'd like to go ahead and find out how many of you are full-time day traders, private day traders. So in other words, you don't work for an institutional company. You don't work for a firm as a broker or a CPA or anything like that. You actually go ahead and are a day trader. Okay, the votes are coming in, and I'll show the after we get everybody's vote here. Okay, almost done. Okay, we'll go ahead and stop it there then. And I'd like to show you the results. So we have 64% of you that are private day traders, and 32% of you that are not full-time, and then 4% of you that work for a firm. Okay, great. And I'd also go ahead and like to ask another question here then. Which is, for those of you that are trading, like the stock indexes, could you go ahead and tell me how many contracts that you go ahead and trade with each of your trades? The reason why I'm doing this, and I posed this question in the room yesterday, I was kind of surprised by some of the results. I want to go ahead and tailor some videos, some custom videos in that, but I want to use the size you actually trade. So that it makes it real to you. Obviously any trading that I do, it's not simulator based, as you know, it's all real trading, but I want to go ahead and make sure I'm using the sizes, so when I do something like I do, and you see the profit loss, it's directly applicable to what your profit loss, would be. Okay, I see the votes are coming in there. Kind of a interesting mix here. It looks like almost everybody's voted. Okay, I'm going to go ahead and give it one more second here.
And Robert, just so you know, you won't get, I don't know if you'll get 100% because Robert and I and you cannot vote, so I don't know if they include us in the 100%.
Okay. Yeah, and I think there were some other people that logged on too that aren't actually participating right now. They just wanted to be able to come back and forth because they had other things going on. But let's go ahead and close out the poll. And I want to go ahead and share the results of that with you, which I thought was very interesting. And this is actually a little bit different than I saw in the room yesterday. What I saw in the room yesterday was the average was about 6 or 7 contracts. I saw there was a number of people that do actually do 10 contracts that were posting in the channel yesterday. But here, everybody that's here today is 1 to 5 contracts, and looks like a little bit in the what do we have? 11 to 20 or greater than 20. Okay. And that greater than 20 was not mine. I did not vote on this. I'm strictly asking you guys questions. So, and 27% say you don't trade stock index futures. Okay, well, that's good to know as well. Well, thanks for taking those polls. It kind of gives us an idea. As I said, I do these upcoming videos and stuff like that. I'd like to go ahead and, with a couple of real live trade examples. I'd like to make it real and use kind of the sizes that you guys trade. So thank you for that. Now, with that being said, let's go ahead and get started. I want to go ahead and just point out a couple things here. First, I want to welcome you again. And then I would just want to, if I can get the screen to move here. So, there we go. Obviously, you guys all are aware of this, but I want to make sure, once again, trading is risky. I've made that clear. You guys have noticed on my website, you don't hear anything like you do with a lot of the sites that are out there. You're going to make millions of dollars. You're going to, just be rich and retire in a week, a month, a year. I've been doing this for 15 years, and so I'm a realist about these things. You can make very good money. Absolutely. I certainly, you definitely can make the money. However, it's very risky, and I just want to make sure everybody completely reads this statement, and especially since it looks like there's some newer people with us as well based on some of the emails I've had back and forth. As you know, I always indicate that I think you should contact a registered financial advisor, and your risk trading plan. I do not give specific advice to a person's specific portfolio. That kind of crosses the line. I do go ahead and educate though from a technical analysis basis and an education basis here. So, but that's why I don't answer your questions when you say I'm in this, I'm losing this much money, or I'm making this much money. What should I do with my specific portfolio? That's why I don't answer those questions. But I just want to kind of reaffirm that. And between that, you also notice you don't see the hype on my website, nor do you go ahead and see it in my, my channel posts or anything else, which is another reason I want to go ahead and kind of keep the sizes that I trade, when I'm doing these little video clips for you guys to your sizes so that it doesn't appear to be hyping. So with that being said, go ahead and move on. Just want to go ahead and let you know I am going to be giving you guys this video. I would appreciate you not posting it anywhere else. It's for your consumption only. You guys actually paid to be here. I would like to go ahead and make sure that that integrity is protected. As you know, I'm not charging several $1,000s for these kind of events, or even several, hundreds and hundreds of dollars. And so it's, I guess I'd like to go ahead and make sure that you understand we don't want to disseminate this information everywhere. Today what we're going to do is I'm going to review several of my charts with you. I also want to review support and resistance levels and how I get them. It's a topic that has come up every once in a while. I had a few people ask if we'd be hitting the topic again today. So what I'd like to do is focus on the indicators in brief, and then go ahead and move on to the support resistance levels. And I'd also like to introduce you to something I'm going to talk about a lot more next week in my setups and stops and exits webinar. But I do want to go ahead and give you guys kind of a little bonus, say a little bit about that scale-in strategy I use, because it's very effective when combined with the other styles of the trading that I've demonstrated here for you in the videos with like the 2-bar setups, for instance. It can be a very powerful strategy for you. We are going to take a few pauses along the way, as I mentioned. And also, as far as QA, or Q&A, if you have the questions along the way, I'm not looking at the question bar screen, but Todd and Robert are, Fletch, so they'll just kind of stop me, and if there's a question they feel would be a good time to ask or have answered, so they're going to stop me. So feel free to ask your questions along the way. With that being said, we'll go ahead, and I just want to point out another thing to you from a concept. I love my indicators. I absolutely do. I've used them for years. As you guys all know, I'm an affiliate of the Market Technicians Association, which is an organization dedicated to technical analysis. the Ralph Blocks, the Ralph Acamporas, and all the different well-known names for over the years. If anybody's been around in the 90s and everything else, I've sat with a couple of those guys in different rooms and different meetings and different things along those lines, a lot of the names and technical analysis. So obviously I believe in my indicators and I love them. However, indicators are no substitute for price action itself, and I want to make that clear. This first webinar is so that you get a feel for the indicators that are used. And then the next webinar will go and be, okay, let's discuss the price action that works with those indicators. And then here's our setup, so that's your setups. And then, okay, so where do you put your entry? Where do you put your exit? In my opinion, and how I do it. So, that's kind of what I just want to let you know that this is not meant to be a crutch. Indicators, they're meant to be a tool to be used as part of your understanding of what's important, which is price action. The combination of the two, I believe, is very powerful, but a lot of people that get into the markets, the very first thing they seem to focus on is, okay, give me all the greatest indicators. And the problem with that is, as you see very clearly out there, that there are many people that feed off of that, and they sell you these, several $1,000 just incredibly expensive or very high monthly fee, $300, $400, $500 a month fees to go ahead and lease their indicators. They're out there everywhere, and any of you that have been in this market for more than a month, know exactly what I'm referring to. Everybody's out there trying to sell you an indicator. Everything I'm going to show you today is absolutely not proprietary to me. Yes, there are many of these things I could bundle up and go ahead and create a brand new super indicator for you, but that's not what this is about. It goes against my philosophy. So you guys, I think I made pretty clear in my past videos how I feel about proprietary indicators. So with that being said, just go and understand that, and understand that, learn what we're talking about with the indicators today, but we also need to focus on then the price action as it relates around those indicators. And incidentally, one of the things I refer to when I refer to as indicators is the actual support and resistance levels. I kind of refer to that as an indicator itself. So what I'd like to do is go ahead and flip you over to my charts. It'll be just a second here. Okay. I believe everybody should be able to go ahead and see my screens now. I guess if someone can go ahead and maybe raise their hand to let me know that you can see it okay. Everybody who's got your hand raised, could you let me know? Yeah, thank you. Okay, great. Just want to make sure. So what we're going to do is I want to give you kind of a feel. This is actually my primary trading screen layout throughout the day. I have a number of charts that are kind of behind this, which, and I'm going to break that down for you in a minute, but I just kind of want to give you a feel for overall what I'm looking at throughout the day. This chart you should all recognize and know and love. It's from my nightly videos. In fact, it's even titled Nightly Video Chart. Over here, I have my support and resistance levels that are automatically generated by eSignal. And then I've got a traditional RSI down here, and I'm going to go into these in more detail. I'm just kind of giving you a feel for the layout. Over here, I have the ADX indicator, ADX DMI, and then over here,
Hey, Robert.
Yes.
Excuse me. For this screenshot, you might want to use that red orb thing because it's kind of difficult to see with the crosshairs moving around where you're at.
Nope, yeah. That's great. Give me just a second, everybody. How's that?
There you go.
Good?
Yeah, that's better.
Excellent. Thanks, Todd. So let's go back to, again, here's the nightly video chart that you all see, which is the 15-minute intraday ES chart. This over here is a 15-minute ES chart with support and resistance levels on it. This over here is an RSI. This is an ADX DMI. And both of these charts here are the VIX. Okay. Behind that, I'm going to have to go ahead and take the marker off here for a minute so that I can activate my other chart, because I have two charts that are kind of waiting in the wings back here each day, which is a VWAP and a 190 period moving average chart. We're going to go into more of those, more of that in just a little bit. But so you can see that's kind of my platform, how they're all set up for instant access and reviewing. Okay. Now, with that said, let me get back on the little highlighter. Actually, I may have to leave that off for a second so I can go through the overall layout of the different charts. What I want to do is give you an idea how my charts are coded. And let me get that highlighter on for you. Here you see the letters A and then the letters D, and you got a number followed behind them, and then M and then OT down below here. What those are is the A, it's just the way eSignal goes ahead and moves everything to the top or not. So I use A for intraday, D for daily, M for monthly, and OT for the other types of indicators that I have available to me. So what we're going to do is we're going to go through each one of these charts now, and I'm going to go ahead and try to talk a little bit about the indicators. I'm going to post up on the screen as kind of a screenshot of what the indicators are, and the good news is since you'll have this as a recorded video, you're not going to have to sit there and jot these all down like chicken with your head cut off. So don't try to do that. If you want to take notes as you're going through here, which will just reinforce your learning process, I completely understand. But as far as don't worry about taking notes because you can't remember what indicator was what length or so on and so forth. So let's start right off at the beginning. And again, if anybody has any questions along the way, or if I'm going too fast, I know we have some people from throughout the world with us today. So if there is a language issue, I completely understand. I'll try to work with that. We've got time, so we're not limited to a 2-hour block. So just go ahead and let me know if there is, in fact, an issue. One more thing, I just want to re-verify that we are still recording. Okay. So with that said, let's start off with my nightly chart. What I want to do is go ahead and expand that and put up the actual indicators that are used. Okay, so this is what I'm going to do for each one of my charts. Okay, this way you can go ahead and look right over in this area here, and I'll blow this up for each one of the charts then so you can write down, okay, this is what he's got in the chart. And again, if we open up that little secondary chat room, if for some reason there was an issue, you can seek clarification there if some words were running too far off on the side, you don't know what they are. But this should be a good way for you to see everything. So you can see here, moving average, 20 period, and the little E at the end here is the, in fact, let me switch this to a different pointer real quick. Don't know how to flip that around. The little E there, or the S, that's simple or exponential moving averages, okay, when you see that. So just so you understand, so now you can see, okay, he's got a 20 period moving average based on the close, which is exponential. And he's got a 200 period simple moving average. Now, I've got two moving averages, which I do not talk about in the public videos, okay? You've seen them on my charts, but they are more aggressive, and I want to point these out to you, okay? They are a moving average. It's a 3 period and a 5 period of the high, low, and close divided by 3, and these are simple moving averages, okay? And when I get back to the screen over here, I'll show you more about that. But that's two moving averages which you're not, really accustomed to necessarily having on your screen. And many people ask what they're about. These will become important next week as we're talking about setups, entries, and exits. Okay, these are more for the more aggressive trades. These are, and these will tie in very well with next week's, webinar. But I want to make sure you have them as part of my indicator setups here. So just wanted to focus on that. Then, of course, you're familiar with the 50-period moving average, which is a simple, and I also have an 18-period moving average, which is exponential on here. Then below that, I have a standard volume chart and moving average convergence divergence, which you've seen in the videos, with a 12-26-9, which is a standard MACD setup. Okay. And let's go ahead and move to the next part of this here. So I think what I want to do is actually get through all of these first, as I think about it, unless anybody has any objection. This chart here is in particular, I've gone ahead and hit in my nightly videos several times, but I think everybody can see what the indicators were pretty clearly and have seen how I use them on the nightly charts. So I think I'm going to keep going, Todd, unless you tell me anything different there.
I think this might be a good opportunity for Carl. Posted a question a bit ago, and you could probably work this in this area. He had a question about the support and resistance levels and if you could describe why you have certain bandwidths, like the ones that are actually right in front of us. You can see that some are wider than others.
Nope, that's a great question, and I tell you what, Carl, if you recall at the end of my video or towards the end, I want to go ahead and actually spend more time on that with you. Rather than just hit it here, I want to go through the concept of, again, how I go ahead and generate those levels, and then we'll revert back to this chart. After we have that discussion later in the video, we'll go ahead and revert back to that chart and then go and look at some actual levels and get more specific. So let's do it that way, because that will definitely answer his question as we get into that segment later. And that's kind of a little special thing. I wasn't going to go into that support resistance level stuff so much today, but in realizing that was something a couple of you were hoping for, I wanted to do that for you today. So let's go ahead and hold off on that question. Todd, I'm sure I'll, through by default, later answer as we get into it with the support resistance, but since you'll be gone, Robert, if you can just keep me honest there and make sure that I do answer Carl's question.
And one more
yes.
thing. If people can lower their hands in the list. I see a bunch of yellow hands, so if we can take your hands down, so if we see a question, we know that you have a. We're going to ask you to type the questions in the question bar, so you don't have to raise your hand unless Robert asks you to raise your hand for a certain survey or something like that.
Okay, sounds great. So let's go ahead then and move to the next chart. I want to get through all these. I want to make sure that you have, all of my actual indicators. This is the real deal. This is what I really look at, and I want to make sure you have access to that. That's one of the reasons you're here today. So moving on to chart number 2 here. This is the pivot support resistance levels. This will become important in our conversation later as well. So what you're looking at, these are auto-generated lines. And I'm going to go ahead and put the highlighter back on. These ones in blue here are the daily pivots. And the way this works, of course, is the top blue line is resistance level 2. The second from the top is resistance level 1. The one in the middle is the primary pivot of the day. S1 is the first support level, and then S2 is the second support level, which is down here. The green ones, the ones that are in green, are my weekly support and resistance levels, and the ones in red are the monthly support levels. And the reason why I'm explaining that to you as well is because you never know. I may go ahead and decide to do a little pop-up webinar for you guys one day, for students of mine in the channel. I may say, hey guys, here's a link, come on into the channel, and I may want to show you something. So this will give you a leg up on those, types of little webinars that I do. You won't be like, now what's that blue one? What's the red one? So I'm trying to give you a little leg up there. Let me go ahead and open up the actual requirements for you of what's in there. What you'll see here on this chart, the 8 and the 21 period moving average are actually basically disabled on this, so you can disregard them for the purpose of this chart. You see up here in the upper left-hand corner, daily E-mini trading 12/27/2006. It's been almost 2 years since my last major overhaul, but I tweak little things every once in a while. Every couple of years I revisit all the indicators, make sure they're as viable as they have been. And as you can see, since 12/26 I haven't done a major overhaul, and yet through my nightly videos you can see we've gone ahead and had some great up moves, and we've had some great down moves since January of this year, and we're still able to go and work very well with them based on these indicators. So that's why things don't need to be changed too often. And with that said, we'll go, looking in here then, 88 and 21, I did eventually take off of here, so it's not even visible. And so the one that is visible on here, though, is the 200 period simple moving average. Just want to make sure everybody sees that. So the 200 period simple moving average, and then the weekly, monthly, and daily pivots. Now, in eSignal, these are auto-generated for you, which makes it very nice. I know many of you have different trading platforms. On my website, you know that I did include a link to the My Pivots website to go ahead and help you get some of these pivots. I also have developed my own mathematical calculator. I don't believe My Pivots does monthly pivots, if I recall correctly. But there are certainly several pivot calculators out there where you can just type in the monthly high, low, and close, get the number yourself. And I also have my own little Excel spreadsheet. If somebody can't find it elsewhere, I'm more than happy to get that to you. But basically that's what this chart is, and this is a key chart. It's a very important chart for me in the middle of the day, and I want to make sure you understand that. We'll talk more about some of the actual setups that revolve around this next week, but suffice it to say, I have a whole chart dedicated on my primary trading screen each day just because it is that important. Let's go ahead and go to the next one. And that's this 15-minute RSI. Now, that sounds pretty simple in RSI. Well, there's going to be some setups around that next week that you're going to go ahead and see, but forgetting that for a moment, keeping it real simple, this RSI is, first of all, I want you to understand, I use it for the whole 24-hour trading period. That's the first thing you should note about that. This chart is a 24-hour trading period chart, not just the open traded session. Okay, so to see that down here, it goes all night long. Now, basically, in a nutshell, my bias, if I'm looking for long side trades, I really want that RSI to be above the 50% level. And again, there's going to be some different patterns and setups around this, but at a high level, just understand that I'm wanting, so like when I'm doing shorts, I'm looking for this to be below the 50% level, and unless it's a scalp, there are, as we're pulling back from a resistance level, there may be some scalps involved. But when I'm looking for my trend trades, I'm looking for the RSI to be in agreement. Okay, so this is a 15-minute RSI of the S&P E-mini futures contract. And let's go ahead and there's really nothing. The period for that RSI is a 21 period RSI. Just want to make sure you know that. You see there's a lot of other stuff that's all been hidden down below here. This is one of those modifications I'll be making in my next revision. All the garbage above and below, I didn't need. It's already on other charts, and it was just information overload. So all I really wanted was the RSI on this, and that's why I'm focusing on this for you. Everything below here, this was an ADX, which you already see on another chart, and up above it was a price chart with some moving averages, stuff I already have on other charts. So now I've just condensed it to be an isolated chart until I make my next revision, which is probably coming up here in around December. So just understand it's a 21 period RSI. Moving down below, this is a 15-minute ADX. Now, what's important about this ADX, I want you to understand a couple things here. This ADX, time frame wise, is actually a regular traded hour session. On the 15-minute ADX, my personal opinion is that the ADX gives much better trading signals, some of which we're going to actually talk about with setups next week, because they're very important. In fact, there's going to be another chart I'm going to be going to in a little bit. I was talking about those bundled indicators. One of you recently, I don't know if it's the person in this actual room today, but one person not too long ago said, hey, you know what? What do you think of this guy's indicators? It was a black box indicator thing that a guy does on YouTube. And I went back and looked at it, and in my opinion, all it was the ADX DMI indicator here. And so I went back and I kind of imitated the indicator and basically got it to almost match and give the same signals for absolutely free. You don't have to go buy this big fancy black box system and be part of his monthly chat room. So my point with all that is that the ADX is one of those indicators that some people's black box systems keys off of. I find the ADX to be very useful, very important. This is a 15-minute ADX of the E-mini chart, and it is again only the regular trading session hours. So from 9:30 to 4:15, not the 24-hour session. Once you throw in the 24-hour session into this, it kind of throws off some of the good quality signals. So just keep that in mind. Okay, moving over here to the VIX. Oh, you know what? I'm sorry. There's one other thing. I apologize. There's so many things to show about these different things. I don't want to miss anything. I wanted to go ahead and show you the time frame because I do have some different ADX time frames. On this chart there that was in the lower corner, it is a 13-7, so 13 length, 7 smoothing ADX. There's different lengths out there. There's 14-14, 14-7, different lengths out there. I've created another one through the eSignal platform. So I want you to understand that this particular one is length of 13 and smoothing of 7. Okay? So moving on then to the upper left-hand corner here, we've got the VIX. Now, we're going to go ahead and get right into all the different settings for this. These charts, the VIX is an excellent trading tool. Some of my key setups go ahead and work off of the VIX. So you're certainly going to be hearing a lot more about this next week. I want to go ahead and have you, jot down all these different time frames here once again. Again, it's a VIX 15-minute chart. And let me get the highlighter up here again. It's a VIX 15-minute chart, 20-period exponential moving average, 200-period simple. Now, again, you'll note here my high, low, close, more aggressive setup signal moving averages here, and then the 8-period MA moving average and the 50-period moving average. You'll also note the 21-period RSI on here again. I found that 21-period RSI to be very valuable on the VIX. Okay, so we're going to go and discuss that more, as we go forward, with like the upcoming webinars and that. But you need to understand that I think these are a good combination. In fact, you notice I have 2 VIX charts, so I feel there's some validity there. So hopefully everybody's seen that enough. And like I said, you can always go back, watch the video, and pause it, and then jot these down at a later date. So don't run yourself ragged trying to write them down. Now, the next VIX chart. These are some trading channels. Okay, and I want you to go ahead and see it because you can already right off the bat, with just being a layman, you can see some things right here. Wow, when it breaks above this channel, starts trending along it, you can see it down here, up here. You can see the trending channels in that. So I want to go ahead and make sure you have access to those, and those will be. Now, this is again VIX 15-minute chart, and Todd, is the spotlighter okay, or do you want me to use the arrow for pointing to these?
Arrow's fine too.
Arrow's
just
fine?
something, and I think it was mainly on that the general screen where you had all those different charts. But
Okay.
Since we have an interruption here, or a break, Vishal did have a question about the ADX chart. Since you just discussed it, I don't know if you're going to go that in more detail later.
Sure.
But he wanted to know if you're going to talk about the significance of levels in the ADX chart, like long above 20, for example.
Okay. As far as I tell you what, let's see if we have time at the end of this, because it does depend on the time frame. I do have different levels marked. The historical way that the ADX is used is not really, in fact, you'll find it with a lot of my indicators, actually. I think some of you have gotten exposure to that with my nightly videos. A lot of ways that some of these indicators are traditionally used, I don't use them. And that is actually one of the things that I don't use. Like long above 20 is not something I use. Sell when it gets above 50 or 60 because it's overbought, or oversold as it may be because it's a trending indicator. I do not use some of those concepts. There are some things that I look for at the ADX. why don't you go ahead and make sure that I get that question when we get kind of a little bit more, maybe a last minute open Q&A session here in a little bit, or
Okay.
at the end of the webinar. Okay.
Okay.
So because I want to kind of get through all of these first, so we know how much time. I know a lot of people got
Sure.
things going on today, but good question. So let me go ahead and actually get back down the line here. So we have then, of course, this is a 10-period moving average. It's a simple moving average, but it's of the lows. It's a 10-period moving average of the lows. And then here is a 10-period moving average of the highs. These channels have been around for a long time. Different people have done different work on them. This is not my work, but I have found that they are effective on the VIX, and so I want to make sure you have access to that. So, hey, Todd, is that you typing?
Yeah.
Okay. You're coming through a microphone.
Oh,
um, so maybe if you could just do me a favor and mute that while we're speaking, or so that'd be great.
sure.
So the 10-period lows and the 10-period highs, and these are simple moving averages, and then we have a 20-period exponential, a 50-period exponential, and then a 200-period simple. So these are my standard indicators here, but these are something new for you to see. The 10-period low and the 10-period high channels. Okay, very effective. Not just in the VIX. They do certainly have application elsewhere, but I've just found them to be what I would consider to be very useful for the VIX. Okay, so with that said, we'll go ahead and move on to the next charts, which the next one here, let me get some more size on it. Okay, this is a 190 period simple moving average of the closes of the SPY. Okay, so the spider. All right, I found this, and this is again only regular trading hours. Because that's what the spider's action is. And what I want to go ahead and denote here is just take a look. If you put up a 190 bar chart of simple moving averages of the S&P, or the spider, excuse me, you'll see how often price reacts around these areas. And so I'm trying to get some data on here for you, so you just see what I'm talking about. And you'll see resistance levels, you'll see the support levels being held. It's a very useful chart to look at on an intraday basis. Sometimes when I'm trying to determine a moving target, if I see an area of support or resistance, kind of a confluence of support or resistance, I'll refer to this chart too and see if this chart is also going ahead and demonstrating support or resistance level. I would encourage you to do some homework on that. Go back and look at this and just pull up 4 or 5 months worth of data, and you'll be like, wow, yeah, that really seems to work out well. So what I use for that setting is, again, it's a spider chart, okay, and it's a what's what I'm looking for? It's a spider chart with just the regular trading session hours there, and it's the 190 period simple moving average. Okay. So the next thing that we have for you is the VWAP, volume weighted average price. And here again, I got to get some more data for you to look at. This now, just so you know, this is actually the E-mini chart, and this is a 1 minute E-mini chart, okay? And here again, what I'll say to you is that the moving average is a 360 period moving average of the close, okay? And that's volume weighted. I want to make sure you see this time. This is 360 bars, periods, of the close on a volume weighted moving average, not weighted exponential or simple, but volume weighted. And it's on the E-mini 1 minute chart. Okay. Now, once you do that, go back. Try to get some more data in here. I would say it's the same thing as the SPY. Go back and look how often price reacts around that area there. You'll see breaks and holds above and below. There's a lot of reactionary stuff there. So if we're in the private chat room and I may say something like, seems like it's holding the VWAP, or if I going back to other charts now, you start learning some of the terminology. If I say it's holding the PP, it's a primary pivot. If I say that the ADX is rising, we'll talk a little bit more about that at the end of the seminar. But you'll get a feel for what I'm talking about. Those are not necessarily things I'm going to talk about in the public chat room. And like I said, we'll go ahead and we'll talk about that at the end of the seminar. I got a poll for you. I really hope that all of you will be able to stay around for that poll. I value your opinion. So again, in closing, 360 period moving average, volume weighted on a 1 minute E-mini chart, and do some studying on this. Back test it, if you will. Look back 4, 5, 6 months, different market conditions. It has a lot of value when you're determining some support and resistance levels. So that's kind of the initial stuff that I'm looking at throughout the day, okay? I just want to give you that feel. This is it in its entirety here. This is the primary trading setup. Now, from there, I have a lot of then the ancillary charts that go ahead and have factors for me, and I want to show you what those charts are and a little bit about what I see in them or what I'm looking for them. So, Todd, is there any questions before I go on to that? Okay. I'll go ahead and say that's a no, and we'll go ahead and we'll move on to the next part.
I'm sorry, I was unmuted. Paul did have a question, Robert, about the SPY chart, and I'm assuming he's referring to the 190 simple moving average.
Sure.
I noted it as a daily SPY chart. He was asking if it was a 1 minute chart. Is that, Paul, was that your question?
No, you know what? That's a great question. Guys, if I miss something like that, please let me know. I have so much information swimming in my head that I want to share with you. I feel like I'm creating a nightly video. This is exactly what I go through every night. I start doing a brain dump, and then I got to edit everything back to pieces to make it make sense for you, just because there's so much to share. Obviously, I have 15 years. So getting back to that concept, it's actually a 10-minute bar chart. It's a 10-minute bar chart of the SPY, Paul. And by the way, good morning to you. I didn't get to say hello when you came in earlier. Okay, good question. Todd, was that it?
I believe so. Yes.
Okay, let's go ahead and we'll move on then. 2 additional charts in the intraday realm that I want to share with you are a 60-minute and 120-minute chart. Now, these are of the S&P E-mini futures contract. Again, this is a 60-minute chart, so a longer time frame. One of the things that I'm looking for here, I want to give you the indicators that are on here. Let's do that first. And this will be exactly the same for the 120-minute chart, so we're going to save ourselves some time. I'm not going to review the 120-minute chart other than showing you something on there real quick. So let's look at the settings here first. Let's move this over a little bit so everybody can see it. Okay, the first thing is the Bollinger Band that I have up here on the top. Let me get the highlighter or the arrow. We have a Bollinger Band with a periods 22, which is a pretty common standard deviation length combination. Okay, then we have a 13.8 directional indicator, the ADX DMI indicator. Then we have a traditional MACD 1226.9 indicator, and then here again there's that 21 period RSI. So now you're starting to see a theme. Okay, you're starting to see, gosh, I actually do value the opinions and the signals that I get out of the MACD. That 21 period RSI has weight in my opinion. And then also the ADX DMI. Those are 3 kind of core indicators that I use a lot, and you'll see why when I show you some of the setups next week, in the actual then trading part of it, you'll see why. So just understand that this chart here is a chart that I refer to from the longer term perspective. Again, a 60-minute and a 90-minute, or excuse me, a 60-minute and a 120-minute chart are important when I'm looking for the bigger moves. I trade a lot of size. When I'm looking for size trades, I want to go ahead and not just be there ideally, if I can help it, for a very short amount of time. I'd like to be in there and be able to ride it. So it'd be nice to be on a more of a macro trend. Okay, I don't typically now. I'm gonna. I guess the other day I was scalping in and out quite a bit, but as a rule, I don't want to be a scalper. I want to be a trend trader. I want to get in a nice position and maximize my move. So what I'm going to do here is get this back down. What I'm looking for in this kind of chart, I'm looking for, in this particular case, the consolidation periods are what's important on a Bollinger Band. Okay, I know that people they talk about returning, going to the lower band, bouncing back to the middle band, and admittedly, you know what, they're absolutely right. There is validity to that because guess what? You know, this is a 20-period moving average. As you know, it's one of my core moving averages. The 20-period moving average does work, but there's all this work around the Bollinger Bands about, okay, hits the lower band, bounces back, then it comes back down. I'm not concerned about all that, okay? The way I use a Bollinger Band, what I'm looking for is this consolidation, and I'm looking for the breakout of this constriction. That's what I'm looking for. And then what direction does it break out from that constriction? And then I look for a trading opportunity if it seeks agreement from the other indicators. Now, with that being said, we're not, we'll go into all the specifics and the actual entries and everything else next week. But what I want to, since we'll get back to the question, Todd, was it Vishal that asked the question about the ADX?
About which?
About the ADX indicator, the ADX
Yes,
TMI?
he did.
Okay.
Yes. About
Vishal,
going long about 20.
a couple of things that I do, since we're on the topic and it's staring me in the face. What I'm looking for is a rising ADX indicator, okay? That's the first thing I'm looking for here, all right? Now, again, there's all these people that say it's got to be above 20 or it's got to be above 50. I would challenge that statement personally. Actually, I believe 25 is kind of a magic number. This pink line's got to be above 25 before you can go ahead and enter. Well, what I found is, like right here, here's actually, and I believe 30, if I really recall correctly, it's 20 or 30, maybe it's 30, is kind of that old standard ADX number. They wanted you to be above 30 to be considered trending. Well, I'm sorry, from my perspective, a lot of times before we get to that level, the move is over. So in fact, you'll notice here, the green line here, this green line is the 30 level. Well, look how infrequently the ADX actually gets above that level. Yeah, when there was really a mega trend after a very nice consolidation here, you did, if you waited till you got above 30, you did have then a few bars of profit opportunity. But you see, there's a lot of other times where, like right here and here, we never, even get above the 30 level. So, and then like right here, right about the time you get to the 30 level, you're almost near the climax of the move. So I don't like looking at the ADX as it's got to get above 20 or it's got to get above 30. What I like to see what the ADX is it rising? Because if it's rising, generally that means whatever trend is in place is a strong and strengthening trend, okay? So here you're catching on to the move way earlier if you're looking at it rising from the lower levels, rising up, versus going ahead and waiting for it to peak above one of these key levels. The reason why I have these key levels on here then, the green level and the cyan level here, the 25 and the 30 mark, and that is for just that reason. Vishal, you probably recall from some of my nightly videos, I've talked in the past, I like to know what other people are looking at, what they're thinking, how they're using indicators, because as we all know, in many cases, people are wrong. And so when there's a herd mentality that jumps in and says, okay, I'm going to go ahead and jump into this thing as it gets above 30, I'm looking at going ahead and exiting, at the same time they're looking at getting in. So I look at the world a little bit differently, and certainly the world of trading. With that being said, I hope this answers your question a little bit. Please don't focus, in my opinion, on the 20, 25, 30 level. Focus on, is this rising? So is the trend increasing? Okay. So we'll move on from there. Just suffice it to say that what I'm looking for at the Bollinger Bands is not all the traditional gobbledygook, but I'm looking is, has it constricted, has it consolidated, and then is it breaking out of that tightening? So it was a wide, range bar or wide range band resulting from a big move. Then it's got to go through a consolidation phase. The longer the consolidation, generally, the more powerful the move as a rule. Okay. Now, I have this exact same chart over again, which is the 120 period version of this. I also have then again down below the MACD indicators and the RSIs. I found them to be, very useful for overall trend, for overall bias. Some of the things that go into my commentary on a morning basis or in a video basis is, what are the overall trends? So you'll see here in a little bit, I look at the monthly charts, I look at the daily charts, I look at the intraday charts, and I'm looking for those trend biases to try to keep me on the right side, because obviously when you have a confluence of circumstances, when you have the monthly chart, when you have the daily chart, when you have the intraday charts all pointing in the same direction, you get better moves. And you've all seen that through my videos the last couple of months. We've been down below the 11,700 level, even back when we were breaking from much higher levels earlier on in the year. We go ahead, and when you have that macro trend in place, it just makes those sell-offs that much more enjoyable and profitable when they're all together. So these multiple time frames become important. So 2 time frames I've found important outside of the below the 15 or outside the 15-minute mark are the 60-minute, 120-minute charts. And just for posterity's sake, I just want to show you that 120-minute chart and give you the same flavor that you see here. I'd like to point out to you that, here again, look at the constriction, the consolidation. Look at the very tight consolidation here. When you go from these, this is a 2-hour chart, so this is a significant amount of time. So when you get into these very constrictive time areas, boy, I tell you, you guys want to impress me, come into the chat room some morning and say, hey, Robert, it looks like we're seeing the consolidation, the constriction on this 120-minute chart. I'd love to have you guys tell me that, because that usually means we're going to get a big move out of it, which is big bucks. So you see, every time it starts to really tighten up and then break back away from the constriction, that it's a very profitable opportunity for you. So I want to make sure you guys all see that and understand that's what I'm really looking at for these charts. Then I look at the additional confluence. You see here, look at that, rising ADX. Rising ADX, as it's going down. Look, you wait till it gets up to the 30 level, you've already lost the move, and then it didn't even really want to stay above the 30 level here. So that's why, Vishal, I don't like using the indicators in their more conventional sense, and I'll try to share with you as I go along my more non-conventional way of looking at them. So let me go and get back to this chart is exactly the same as the last one with the same exact settings, just that it's a 120-minute chart. So let's go ahead and lower that. Todd, do we have any questions before I move into the next ones?
Nothing yet.
Okay. Let's go ahead then and move to the daily charts. Now, the daily charts.
1 second, Robert. I'm sorry, Robert. Vishal just did add a question to that last session you were doing.
Okay.
He was asking me in that chart, the previous chart, would
Yes.
you take a trade while the current bar is in progress, or wait till it finishes?
That's
and
a
I'm
great.
assuming he's referring to probably the Bollinger Band. Since you were just talking about.
Yeah, well, I'm assuming what he's referring to is because this is a 2-hour chart and we primarily focus on our 15-minute bars, and that's a great point. As far as taking the actual trade, I would go ahead and I got to have at least the first bar that denotes that we're going in the opposite direction has to go ahead and start showing itself. So like in this case, let me get the highlighter up. For instance, right here, this bar went in locked in as the bands were starting to change. You see, before they were constricting, now they're starting to smooth out. On the 200 period moving, or sorry, the 120-minute chart, you see very quickly it moves from one condition to the next. So here it's moving up, it moves down. On a 2-hour chart, you generally don't see a lot of it sits here like this very long. Because if you think about that, if it sat here this amount of time on a 2-hour chart, that's 2-3+ days worth of trading, 4 days of trading. The S&Ps aren't that relaxed, and so generally you're not going to see them sit there very long. So I'm going to want to at least go ahead and see. Let me clean that back up. I'm going to want to at least go ahead and see one bar closing that direction. So that would be nice because that shows me the 120 minutes. So the longer term is starting to change into my favor if I'm looking at going short. Then the next thing I'm going to do is look, okay, do I got a bar that's locked into place giving me the same information on the 60-minute chart? Then what happens is when I know I got the longer term trends, and this is assuming that we are in a bear market environment such as we are. The last couple of days have had some bullish tendencies, no question, but we are still below the 11,700 mark. So I'm going ahead and focusing on shorts, as far as trend trading. And then what we're looking for is then narrowing down each time frame to make the trading entry as precise as possible. And that we're going to get into next week. That's going to tie into my strategies. But to answer your question, I want to have at least one bar minimum locked into that direction, that new direction on a 120-minute chart. Okay? And here again, you see, the rising, ADX here also started to go ahead and, validate the signal there. Okay, so let's go ahead and get this stuff off of here first of all. Okay, now the daily chart. Very important chart for a couple of reasons here. Let me get my highlighter out because I'm going to need that this time. A couple things I want to point out here. First thing you see is the RSI has been flatlined for the last couple weeks. And basically what have we done? Nothing. When we were trend trading, we were falling away from the 50 period moving average. When we were rallying back here in April and May, let's see if I can pull that down for you. When we were rallying back here, we were rising and pulling away from the 50 period moving average going up. When we were going ahead and falling, though, we're falling away from it. And since this is a daily chart, it's more significant what the indicators say. In this case, the 20 period RSI, we've basically been trading sideways, and I think there were some comments in the channel yesterday about the 1260 area. I think Dutch was making the comment they saw the 1260 area being repeated, and I actually mentioned there were some other areas that were pretty heavily repeated as well, but nonetheless, that we have gone ahead and had this consolidation, and that's proved out what we've been feeling, what we've been seeing, kind of some of our exasperation. Yes, we've gone ahead, we hit the 11,700 repeatedly, and we keep pulling away from it, but nonetheless, the RSI keeps flatlining. Now, if we go ahead, and this is important for all of you to know, I'll tell you this way in advance of my people in the videos, and that if we go ahead and get back up here, have the decisive break above the 11,700, and this RSI starts to pull back up above the 50 level and pulls away just as it did back here, you can bet that I'm going to be calling out some long side trades. So keep that in mind. This RSI, the 21 period, you've seen it now in multiple charts of mine. I feel, and that's not a custom indicator. It's not a black box indicator. But I'll tell you this. It's a good point. I've seen a lot of black box indicators that are heavily focused on the RSI being above or below the 50%. They're basically trend indicators. Is the price above or below the 20-period moving average? Is it above or below the 21-period RSI? A lot of these indicators that look really great, they light up these the bars, like all the bars are blue here. Well, great. Okay, it's below the 50 period or 50 point RSI range, and it's below the downtrending 20-period moving average. So guess what? It goes and lights up a blue. And you know what? Some of these black box indicators, they're not much more complex than that. If you put up like a 21-period RSI and a 20-period simple or exponential moving average, see how your bars compare to what you see on these like trending indicators where these people want to say how much millions of dollars you could have made if you just use their indicator. You'll see, wow, with just those two indicators, I can make my, indicators look, my sells and buys look exactly the same. So what I'm saying is that see if you're below that 20-period moving average, and if your bar would be red as well, and it would be. So just keep that in mind. That's why, again, I'm really resistant on a lot of these black box indicators, because they're many times based on very simple concepts that are already out there, except that you don't have to pay thousands of dollars or even hundreds of dollars for them. So a little bit of a tangent there, but it's very true for you. I think if you go out and test that theory there, look at a 21-period RSI, look at a 20-period exponential moving average against price, and then see would your indicator give a sell or a buy against what the fancy indicator you're being offered through your email is. You'll see what I'm talking about. So let's go ahead and erase this. All right, so the indicators I have on here, the standard MACD 12-26-9, 21-period RSI, and then from there, what's important is the reason why these arrows are on here, I wanted to highlight for you guys a couple of the divergences, okay, because divergence trading is, I know a lot of people don't like the MACD. I think I've even commented on that in my videos. And yet some of the calls that some of you guys have said, like, wow, that was great, some of those calls were based on the MACD. So, I guess I would encourage you to give it its due, take a look at them, and see if you can see some of the things that I'm seeing. It's a free indicator for you. It's not like I'm trying to get you to buy any indicators, but it's something that's helped me give you analysis. So I would encourage you to go ahead and keep that in mind. What you're seeing here, of course, is a negative divergence. Now, that's another thing. I do not use the MACD indicator in its traditional format. A lot of people look for the cross of this blue line here, a cross of the blue line here above the red, so the fast above the slow. That's how a lot of people use that. I personally have seen too many people get themselves whipsawed with that, so it's not something that I've really incorporated into my trading. What I do with the MACD indicator is, let me clean this chart up a little bit for you. I look for the histogram, okay? The histogram is right here, and I look for divergences, positive or negative, and how that's relating to price. And I mentioned this not too long ago, that a failed MACD indicator signal is as powerful as one that works. So what I want to do is show you that, because that will also become important. Here we've had this negative divergence, as you've seen. If this MACD and this price starts to come back above 11,700 and the MACD starts to go into positive territory, it's going to be, and this RSI goes into positive territory, just bank on the fact that you're going to see in my nightly videos me talking about a move to the neutral bias. So, right now we have the sell side bias as we go ahead and we walk into each day. I'm looking for the sell side first. If we shore up its support, then I would look at taking a trade if certain conditions are met. We're going to talk about those conditions heavily next week, because next week's really going to focus on aggressive entry strategies. As you know, in my channel and my videos, There's plenty of people that are having a hard enough time getting it right, going ahead and talking about the two-bar breakdown or two-bar breakup and the pullback, and where to enter and how to enter. Well, I'm going to focus heavily on all of that next week and introduce some additional aggressive strategies for you, to really enlighten you to some great trading opportunities, in my opinion. So but understand in closing on this that we are going to go ahead and be looking for these a failed signal as well. We did get the sell-off down to this point, so the indicator was working just fine, but we got some fundamental news in the market about the bailout, and that stalled our decline. It may seem simple to say, but I said in my video, I'll say it again, that had the government not bailed us out here, we likely would have already been lower, because the indicators were all pointing for this thing to continue going lower. So what I'm looking for is then confirmations or failed signals. Now here's a time where we went and failed on the daily chart, and this led to a powerful sell-off. What should have happened, and that's why I got this blue line kind of marked down through here. You see you had the RSI was giving a sell signal, but the MACD was starting to rise. Okay, so you're really looking at, we had a nice long sell-off from way back up in here, as you'll recall. We should have been looking for a bottom in this area and then a move back up, at least for several days at a minimum. What happened was,
Robert,
yes.
I do apologize, but it seems like we're getting a bunch of questions, the same questions, so I think it's important to bring it up.
Okay.
Several people would like to know why, since you trade mainly the ES, why do you utilize the Dow daily?
Well, because you know what? Let me go ahead and show you a couple things here then. Since it's a question that came up a couple different times there, let me pull up one of my other charts for you. This chart right here, which was one we were going to get to in a little bit, is the three main stock indices. You'll see here it's the E-mini, it's the S&P, and it's the NASDAQ. I don't like using the ES daily chart because of the fact of the way the overnight trade affects the chart. So I don't use the ES daily chart nearly as much. I like the signals that I get off of the Dow daily chart much better, just as I do with the S&P cash index for like the monthly chart. These and so understand what you're asking me then is, how did I arrive at these? And how I arrived at these is, and I kid you not, 15 plus years experience tinkering around with different charts, looking for just the combinations that gave me the signals that I could see best, for my trading style. Remember, and let's not forget, I came from the stock, market, or from the stock and equity side of the business for my first several years in the 90s. I moved to the futures side of the business. Actually, basically when the Dow futures came out is when I first started going and dabbling with that, and then I eventually moved to the S&P because the Dow was just too thinly traded. Back then, when I was trading the Dow, because of the size I was trading, I had to call my orders into the pit, and that was just nerve-wracking. Sitting there, calling in, waiting for the guy to answer the phone, seeing them get the order filled. It was just nerve-wracking. So I eventually went to the S&P contract, where you could get more size done and not have to worry about calling into the pit, so on and so forth. So and I understand there's more volume in the Dow today than there was obviously back then, but I fell in love with the S&P over the years, and so I've stuck with it. Now, with that said, what my point was, look at the red and the blue lines here. This is the Dow and the S&P. What this green line is the NASDAQ. So look, in tandem, how well the S&P cash index and the Dow go ahead and kind of trade along with each other. This was something I was going to cover later, so I guess I'll cover it now then. And what you can see here is, and the reason I use this chart, and then I'll get back to your question, is because I'm looking for just this kind of thing right here for the NASDAQ traders. Every once in a while I get a NASDAQ trader, an NQ trader, that will go ahead and ask me, what I think. Well, what I'm looking for is just this kind of thing right here, is where the S&P and the Dow are, going ahead and kind of being a laggard, whereas the the NASDAQ has been rallying. So here you'll see there's an enormous gap. Through this time, they were trading very consistently with each other. Through this time, they were going ahead and disparate. Well, what does that mean in English? That means that NASDAQ, when it catches up to the other indicators, is going to catch up more ferociously, and you're going to have, a bigger sell-off percentage-wise. So it's important to know. So I look for, is one of the indicators going ahead and disproportionate to the others. Usually, as you can see, they're usually in tandem. But the NASDAQ seems to be the one that likes to go ahead and get away from the other indicators, sometimes to the positive, sometimes to the negative. But so going back to the Dow, I fell in love with the Dow charts because of my stock trading days, and I found it to be a good clean daily chart to look at for some of my analysis. The S&P charts, the S&P cash index chart, I found to be okay, but I just liked the signals I got better off of the Dow chart. And really, if my signal just looks a little better, I should be right, because as you can see, look at the analysis here. The S&P is moving with the Dow. Okay, the only one that's not moving in tandem is the NASDAQ. Okay, the NASDAQ seems to go ahead and beat to its own drum occasionally. Nonetheless, it's it's still close enough. The overall trend, the macro trend, percentage-wise, it may be off slightly, but the macro trend here, it's trending up. So is the rest of the market. Here, they're all trending down very closely together. Here, there was a slight rally in the S&P and the Dow. There's a much bigger rally here. So percentage-wise, it's different, but they're going the same direction. What you're not seeing here is like the crude oil chart, where the NASDAQ was going down sharply while everything else was going up sharply for several days. That's not what you're not seeing, those kind of divergences. So in summary, I go ahead and get much more benefit out of the Dow chart as far as my signals, and in part that comes from my stock trading days back when I was literally beating my head silly till 1 o'clock, 2 o'clock, sometimes 3 o'clock in the morning, only have to get back up then several hours later, looking at hundreds and hundreds of stock charts each night to find just the right setup for the next day, when the stock indexes, it was either up, down, or sideways, and there was plenty of volatility. So that's when I made the switch, like I said, in the 90s, late 90s, to the S&P futures contract. So that gives you a little bit of history too, why I'm looking at the Dow, and also why I kind of switched to futures many years ago.
Robert, one quick question.
Yes.
I think it was Steve that asked a question, and I kind of am in agreement. On the upper left corner, it says E-minis, S&P, and NASDAQ, but we do not see Dow. Is that are we missing something here?
Yeah, that what happened was, this is a multi-symbol chart, and the symbol got changed when I was horsing. Yeah, I was horsing around. What happens is, if I can't do it, the thing here. It's a good question. It's a good point. The Dow is the one that should be on there, not the E-mini. You're still going to go ahead and see here. Let's go ahead and it's not clicking. I'm trying to get. Oh, there we go. Okay. Give me 1 second, everyone. Tell you what, let me do this here. Okay, and Robert, before we go ahead and get started with those questions, let me go ahead and just share in closing on this subject with everybody that we were finishing before we took the break. Everybody, the blue line on here is the Dow Jones Industrial Average. You can see the same exact thing that I said before applied, which is why I didn't even notice that the E-signal, the E-mini chart, had accidentally got put in there. That happens every once in a while when I compare different charts. I'm looking at something and I forget to switch it back. But in this case, you'll see that The same rule applied. The Dow and the S&P indexes track very close together, while you have the NASDAQ as the outlier. So everything I said, absolutely applies. And again, you have the history now of why I've kind of grown very fond of the Dow for one of my indicators, even though I trade the S&P. So with that said, Robert, let's go ahead and get some of those questions out of the way.
Okay. Did you cover the e-signal version? Did you cover the questions you already got?
Yeah, no, I did not actually answer those questions. I was going to take them one at a time real quick. Okay, let's go with the one that I remember off hand here. Let me get rid of this one. The version of e-signal that I'm using is the 10.1, and it's the e-signal like Pro version. Mark, I believe, is the one who asked that question earlier, if I recall. So that's the version that I'm using right here. It's the latest and greatest. The problem is that for like a guy like me, I've got all the different exchanges activated. I've got a lot of different things out there. My monthly bill on that these days is about $450. For you to go ahead and get this, you could get basically the same thing with just getting the CME activated for probably less than or around $250 is my guess. The exchange fees that I pay for all the different foreign exchanges and stuff like that is kind of one of the things that throws my rate much higher. So, but eSignal Pro in that version there. Hope that answered your question, Mark. What else do we have, Robert? The volume?
Yeah, volume.
Okay, let's go to volume here. I want to go ahead and actually pull up a chart, though, so we can look at that together. Okay, for volume, what we're looking at here is my bar is blue if it's gone ahead and higher than the previous bar, and it's red if the current bar is lower than the previous bar. So it's bar over bar, not based on the price action, based on the volume from the last bar. Okay? Go ahead and, Robert, what was the next question?
Jeff asks, are there any advantages to trading futures versus SPY versus SSO?
Well, good question. And the short answer is there are advantages. For some people cannot actually even trade. Some people have only opened up non-margin accounts, and if you don't have a margin account, you couldn't even trade the futures in the first place. So for the people that don't want to have a margin account or take, then the SSO type option might be a good option for you potentially. Clearly, you need to consult your registered financial representative on that. However, if you're a person that likes leverage and wants to seize upon leverage, then you're going to get more leverage out of things such as the futures contract. So that's kind of the advantages and I guess really the advantages. The advantage is the SSO. If you don't have a margin account, you can still go ahead and take advantage of these moves. And these new products that are out there with the Pro shares, you can actually, when the market's going down, you can actually buy them, which goes long, because some people can't go short in their accounts. They can only go long. So that would be the advantage of having those kind of instruments available to you. In fact, I've actually done videos. Whoever asked, Jeff, I think you asked that question. Jeff, if you watch my past videos, I've actually done a couple of videos on like those Pro shares, just highlighting that they're out there for people, sending and showing people their website and everything. Because for people without margin accounts, they are a great opportunity, in my opinion. But you need to consult your financial representative and your broker for your risk tolerances and that. But it's just as an educational perspective, it's out there for you. Okay, great questions. What else do we have?
I might just also add there may be tax advantages with futures with the split between long-term and short-term capital gains.
That's true. That's true.
Okay, we have Vishal asking, how do you focus on so many charts intraday when the prices are moving so fast? Are there 2 to 3 charts that you specifically focus on rather than view all of these 8 to 10 charts?
Well, first of all, let's go ahead and bring this back. Vishal, recall, what I'm looking at here is this one screen as my primary screen, okay? And this screen is very easy for me to go ahead and read and see. You got to, maybe what you think about is put it in this perspective. This is all on one screen for me, okay? That's why I said this is my cockpit. This is my primary, trading screens. Anything I do outside of that, and what you're going to see, actually, let me scroll down here real quick. Right here, a lot of these are daily charts and monthly charts. They don't even get looked at really intraday. They're more for my end of day analysis or pre-market analysis. And then as far as the intraday charts, many of the key charts are actually all right on this master blaster, front page for me. You'll see again, very key, some of the themes you've seen here: MACDs, volume, price action, RSI, ADX, the VIX, everything that I needed that was important to me, I've put on that front page, okay? The support and resistance levels over here. So I'm like a kid in a candy store with all my markings, but I hope that it helps you see it. It's all on one screen. It's very easy for me to see. For you, right this moment, this may be overwhelming. But I would submit to you that if you take the time to go ahead and get used to this and just have a couple of these different screens all up at the same time, you'll quickly learn, because what you'll see is your mind is kind of like driving down the road. When you first drove, you remember how nervous you were, and you're scared and frightened. Now, I mean, let's be honest, half of us are asleep, we're on the telephone, we're listening to the radio. We kind of go into autopilot when we're going ahead and driving down the road. We don't even have to think about it anymore. That's the same thing. All this stuff is right in front of my eyeballs, and so I get the message kind of delivered to me all at the same time, so it's not cumbersome, okay? So that's how I can do that. And you'd be able to do that too if you had the same set of screens stared up in front of you for several years. You'd be able to do that as well, just like you are with driving your car. You don't even have to really think about it anymore. Okay, good questions. Robert, we good?
Okay. Fedin asks, being an eSignal user myself, with some of the indicators, for example, VIX and VWAP, do I have to download separate EFS file for those indicators, because some of them don't seem to appear standard on eSignal?
Oh, okay. Well, I guess we can address that here. The bottom line is, first of all, the VIX is it's standard. There's nothing that you have to do with the VIX. I mean, you type in the symbol VIX, and then all these indicators are standard, on there. As far as the what was the other one, Robert?
The VWAP.
The VWAP. Okay, for the VWAP, same thing as far as the VWAP. Let me go and I just got to move my screen over a little bit. Sorry, it takes me a second to flip back and forth between the able activate buttons and the marker. Okay, the VWAP here. Where is it here? Where'd I go? It's back up here. My VWAP go. Hope I didn't delete it. Oh, there we go. Okay, the VWAP is all a VWAP is. Keep in mind, and let's go ahead and put that back out there for you real quick. The VWAP is just 360 bars on a 1 minute close, and all you do is go ahead and select volume weighted, and that feature should be available to you if you're an eSignal user. Okay, so you're not downloading a special indicator called volume weighted. What you're doing is clicking volume weighted for a length of 360 on the close. Okay? All right. Robert, are we able to proceed?
Yeah. Okay. Paul just wanted to verify that on volume, the color does not show buyers versus sellers.
Well, no. This is strictly that. Yeah. No, Paul. This is strictly volume as far as it's strictly volume of purchases and sales. It's not showing it's not meant to denote that in this case there was some sort of order imbalance, if that's what you're asking, or something like that. There's nothing unusual, if you will, or any other meaning behind it than the actual number of contracts traded, not meant to denote buy pressure versus sell pressure.
He was just asking about the color, again, that the blue versus red bars, I think.
Okay, the blue is meant to go ahead and be that it's blue. If this bar is higher than this bar, it'll be blue as it is. If this bar is higher than this bar, it'll be blue as it is. If this bar is lower and than the previous bars, then it will be red. It's a bar over bar matching process. So it's saying, am I bigger when I close? Am I bigger than or less than the previous bar? And actually, it does calculate for you even real time in the middle of the bar, but then it doesn't really matter when it's in the middle of the bar per se. What matters is how does it close. And in this case, so it says, okay, I just closed at the 15-minute mark. Am I bigger than or less than the previous bar? And if I'm less than, I'll be red. If I'm bigger than, I'll be blue. It's a quick graphical way for me to see is buying or volume coming in, not necessarily buying, could be selling, is volume coming in, to the market. Okay? So, Robert, we good?
Yeah, we'll just do one more question. We have some more technical questions we can get to towards the end, but Carl asks, do you only use the 15-minute chart? Oh, wait, so he says, so do you only use the 15-minute chart? Do you not reference 30 and 60 charts for confirmation in your trades, or are you confident that the 15-minute irons out all the noise?
First of all, we did look at the 120-minute and we did look at the 60-minute. And for 30-minute, what I do is I just go ahead and I flip this to the 30 bar very quickly. Okay. So, but to answer the question appropriately, I do look at the higher time frames. In fact, I think on my website in the frequently asked question, I mentioned the time frames that I look at. I did demonstrate the 120-minute one here and the 60-minute one here. I've shown you now the 15-minute and the 10-minute, like on the Spider, the 10-minute, and then the 1-minute for the VWAP. So I definitely use some different time frames. But when I'm looking at the 30-minute and the 5-minute, I look at those right on my master trading screen right here. That's this one here, which is also the reason why it's my biggest screen to look at. However, that being said, I do not personally trust, or I should trust wouldn't be the right word. I do not personally give as much credence to the 5-minute and the 30-minute as I do the 15-minute and like the hourly and above. So that's just my personal preference. That's how it's been kind of built up over the years. But that being said, I do look at the 5-minute and I do look at the 30-minute to see if there's anything obnoxiously out of whack that says, wait a minute, now may not be the right time for an entry. So hope that answers the question. I do look at the 30-minute. I do look at the 5-minute. For the full list of the time frames I use, it's on my website in the frequently asked questions. I believe Todd put that up there, with the exception of maybe the 10-minute chart. Okay?
Okay. That's it for now. Vishal just wanted to verify that the VIX is the volatility indicator, and that's correct.
That's correct.
And he asks, how does the VIX correlate to ES trading?
Okay. Yeah.
That's the last question I'll have for now.
Yeah, because we got to get moving on. Okay, to make a long story short, the bottom line is they're more or less the inverse of each other. Okay, and the reason why it's important is because when, for instance, when in our open market hours, because the VIX really is only an open market hours indicator, really it doesn't really follow an overnight trade. But what will happen is if this is rising, then this is falling. Okay, that's it in a nutshell. I'm oversimplifying this concept, but for today, that's what it's going to have to be. I need to keep it very simple. So when volatility is rising in the VIX, when this number is going up, this market, you're looking for this to be selling off, and vice versa. When this is going down, I got to move over on the chart a little bit here. Let's get us, because this is overnight trading, so I need to be able to reflect the intraday trading. Okay, so what you'll see here is as the volatility indicator is going down, the market should be going up, okay? So it's an inverse relationship in summary. And the reason why, though, the VIX is great for me is I like the signals, and that's why I got two charts up here. I like the signals that I get off of the VIX. You know, it seems for me sometimes the VIX is a little less erratic sometimes than the S&P, so I feel sometimes I get a little clearer signal where the direction is going based on the VIX, because what may happen is while this, let's get Tyler back on. Actually, let me get another one. Okay, while this here is a nice smooth rally upwards, the trend down in the E-mini may be bouncing down. Okay, we're actually going to discuss that next week because that's going to be very important. Price action in the E-mini will be very important there. So just understand that what we're looking at doing is looking for other ways to see the same information with more clarity. Okay, so that's the relationship, and that's why I use it. With that being said, we'll go ahead and move on then. Let me clear off the bar there. Okay. Now, we want to go ahead then and get to, we believe we want to finish off the, I did finish off the, well, you know what, I want to show us some more examples. That's what happened when we got sidetracked. The MACD divergence, I just wanted to go ahead and show you some more examples of this. This is the Dow Jones Industrial Average daily chart again. You should all recognize that from the nightly videos. But going back in time here, I wanted to show you here, you know, just time after time again. And it seemed like every month there was a signal here going back through the beginning of this year. Here you had a rising histogram peak while the price was falling, and the price rallied back sharply. Then you had a declining histogram where the peak here was lower than the peak here, yet the price stayed up. And that is, albeit more shallow, it is nonetheless, that's why I use the arrows to help distinguish it, it is still a negative divergence. So what I'm looking for is the histogram to be moving one direction and the price not to be agreeing with it. That's where you get your negative divergences and or positive divergences, such as back here when the histogram, this thing's selling off terribly in January, and yet that histogram just would not make a new low. So what did we get? Powerful snapback rally. Okay, so same thing here. We're looking for, we got a downtrend, a negative divergence, because the price was going up and the indicator was going down. So I wanted to show you there is validity to using the MACD as much on an intraday, or excuse me, as much on a daily basis as anything. And so I want to keep you sensitive to that. It also does give some good intraday signals. However, if I have it on an intraday basis, I like to confirm it with other indicators. So just want to kind of share that with you. And of course, what's also important is a failed MACD signal. I can't emphasize that enough because that is a great message in the market too. It's kind of like the concept of the sells not selling. In this case, it was the buys weren't buying. This thing should have started going in, reversing and going up. When it didn't, that was a huge message of just how weak this market was, and we were due then for a much worse, and that's exactly what we got. Shortly after the failed histogram right there, we went ahead then and got the nasty sell-off. Okay, so just wanted to kind of close out that topic for you. Now let's go ahead and get us back on track. Okay, so we have the Dow Jones Industrial Average. This is another daily chart of it. And again, this is a chart that I use where I'm looking for, and here again, you'll see some of the stalwarts I've been sharing with you. Let me get some more moving average time on this. Okay. We've got the MACD looking for the same things. There's my histogram again. Of course, see, there's the negative divergence. You get used to spotting these pretty quickly once you go ahead and look at them for a while. Now, the MACDs, I got two different time frames on here, and this time, don't be alarmed that this says Rob's ADXDM. I don't have any proprietary indicators. I'll share with you that time frame in just a moment. But what I'm looking for is, here again, a rising not necessarily above 20, 25, 30 level, but a rising moving average. This time period is a 14 over 14. You recall in some of the past charts I had a 13 by 8. This is a 14 by 14, okay? This chart here is a 7 by 7. Okay, so don't get worried that it has my name on it. Sorry about that if I alarmed anybody. Again, I don't have proprietary indicators. I've created some things for myself, but they're nothing that you couldn't recreate an e-signal with just a little guidance, from me as far as what the parameters are. So again, what I'm looking for here is that I'm also looking for from the DMI perspective. This is important. The indicator, basically when the blue line goes below a prescribed level, it goes ahead and really indicates strength in selling. And so what happens is I like to see, what I'm looking for here is, I guess, the, not accordion shape, the trumpet shape here. I'm looking for a spread. I'm looking for one to be going nicely this direction and one to be going this direction. And here you can see that, this alligator mouth, if you will, very nicely. What happens is, though, and this all jives together. Look at how these are all on top of each other over here, time and time again. There's no trend, okay? Now, here's the beauty of this is, and I've said this in the nightly videos for multiple reasons, I haven't really focused on the ADX because I haven't shared that publicly, but this long period of time of this very tight consolidation where none of these is broken out is going to lead, and that's why I want to actually clear this off and get it right back there. This right here, this mess, this tight cluster is going to lead us right back to this again, okay? Which means we're ready for another huge move. Even though with the Fed announcement and everything, or with the bailout announcement and that, we've got another huge move coming. I don't know because this is not a directional indicator. All this says is the strength of the move. And you look how low this is, okay? You see how low the ADX is back here, and you see when it hit it back here. Okay, when it gets low like that, look what happens. Huge sell-off, rally, okay? And this one, the second time around, didn't make it quite as low, but it started rising nicely. It's the same concept. Now look how nice and low we are on this thing. We're getting ready for a huge run again on this thing, which is going to lead us to a nice trend. So I'm looking forward to you guys seeing that and then saying, okay, wow, we're going to have a month-long, 2-month-long, sell-off, or a month-long, 2-month-long rally. Okay, and one of the things we're going to use as our cue at that will be this ADX. Okay, so an important indicator, obviously you've seen it on many of my charts. It's something I've used for, oh my gosh, it's got to be the mid-90s that I've used it. It's been around with me forever, and I love it. It's near and dear to my heart, so I want to make sure you guys were aware of it. With that said, I want to go ahead and turn this over to my indicators so you guys can have access to seeing the settings. Give me a second here. Here we go. Okay, so it's the Dow Jones Industrial Average daily chart, 200 period simple, 8 exponential, 10 exponential, 8 exponential, 21 exponential, 50, the standard MACD. Now, remember, my ADX-DM on this case is a 7 by 7. That's this one down here. It's a 7 by 7, and this one here is a 14 by 14. Obviously, my 7 by 7 is more sensitive and can pre-alert me to some moves that are coming. That's why I have it on there. Okay, and just pause the video at that part. Again, I hope you're not trying to write those down. Just pause the video, and you'll be able to recreate that on your charts. Okay. Next thing I want to do is just quickly show you this. Guess what? This is my fun indicator again, my ADX. This is really interesting. You notice here my setting is 7 by 14. I really want to go and just blurt out the name of the person who's got this black box indicator he's selling on YouTube. But I guess I'll suffice it to say there's somebody out there that's got some charts that looks like this, very similar to this, and it's got some daily commentary around it and offers you to buy services based on that. I'm here to tell you right now you can get that for free using a 7 by 14 indicator here, And we will actually be discussing along this lines a chart like this next week as we talk about setups. But I just want you to see that with just this indicator using these time frames, I kind of recreated one of those black box things out there. So, you know, and I also shared with you earlier the 20 period exponential moving average one. You know, when you're looking at these great flyers you get in the mail all the time, I'm sure you've seen them. Ooh, lots of blue bars. Gosh, I could have made $5,000 if I would have just gone ahead and used that system. Well, then you put up a 20 period exponential moving average and you find out, wow, well, it fell just fine with that, and it would have been blue or red the whole time as well. So, you know, just make sure you're looking at some of the basic indicators that are out there, because some of these proprietary black box indicators, some of them out there, are based on some concepts you could replicate yourself for free. And you guys know I try to give you guys a lot of low-cost solutions so that you're making money and not spending it all on these proprietary things. So that's that indicator a little bit. Like I said, it's really just it was meant for one person. I demonstrated for them how it was, you know, not such a black box thing after all, and that's why that's on there. Okay, the next thing is all three indices. I shared this with you earlier. We did straighten out. We got our Dow chart back on there. The concept is still absolutely the same. You can see that there. So I already reviewed this earlier, so I'm going to go and back off from this one now. You know, just suffice it to say I do use it to look for kind of the divergences in the NASDAQ. But the reason why I do all my analysis on the Dow is because it gives me, in my opinion, better signals, and yet tracks very nicely with the S&P cash and futures index, as you saw. In fact, most of you wouldn't have ever even been able to tell, had you not seen up here, that this was an ES, that it wasn't the Dow. Because if I put the ES on here, you know, back up here, you'll see it's right up there with the Dow. So to me, it's a pretty good indicator, but gives me smoother signals. Okay, the next thing we're going to review is going to be the multi-year spider chart. Now, how many of you have been wondering about what these indicators were, these moving averages? Well, let's get those on there for you. This is something I reference. And so I want to make sure you have this here. And the time frames are the 40 period moving average, the 18 period moving average, and by the way, the 40 is an exponential, the 18 is a simple, and then the 200 period is a simple. And then the only other thing I have on there is the MACD. So one thing I'd like to note for you, I don't know, I'm a little pop quiz. Does anybody see anything in particular on this chart that stands out to you? I know it's a wide open question. I'm just going to see based on what we've been talking about this morning. Well, let me show you something. How about this right here? Lower, 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 higher, higher, higher. Pardon my crummy line drawing, but you get the point. You see it right there. Rising moving average convergence, divergence, multi-year selling, and what happens? The price comes back with a vengeance to go ahead and meet the indicators. Here we have a higher peak. You know what? I'm going to pick a different, sorry about that, guys. Let me pick a different tool here for you. There we go. Now, not much better. Somebody told me I should get one of those drawing pads, and maybe they're right. But you get the hint. We got a lower high here than here, while the price is going ahead and making higher highs in the index. And guess what? Here we are now with the price coming back to, more of a reality. So I use these, and this is a monthly chart. As you know, I use this on the daily charts for the Dow. And now you have the levels that are part of the, you have the moving averages here to add to your arsenal, so you can see these things each night as well. Let me clear that off. Okay. Next, I have another monthly S&P chart. This is the cash index again. I just want to go ahead and show you I'm a strong believer in this 21 period moving, sorry, this is the 14 period moving average RSI, but I'm a strong believer in the RSI, and that's what I want to convey to you. I feel that the 14,
Robert?
yes.
Can I just ask a quick question on the last one? Craig asks, when do you know when the trend has changed after divergence?
When do you know the trend is? Let me get back to the chart here.
When do you know when the trend has changed after divergence?
Okay, hang on a second. Well, there's a couple things that we're looking for here, and you recall in the what am I looking for? The nightly videos that I like to go ahead and take trades that are if I'm taking a long trade, I'm looking for rising support. If I'm looking to short, I like to have the resistance coming down on top of us. We've talked about that both in the chat room and certainly in the videos. So what I like to see is a break. And I got to clear the thing here. Let me do that real quick. So I need to see a break of, in this case, the one that's important to me, just so that you know, Craig, is the blue line here. Okay. So what I'm looking for before I switch everything over, I'm looking for a break back above this blue line. Just as you had the break down below it back here, you had the break above it here, you had the breakdown below with one bar here, but then it rallied back up, hit the upper resistance level, which was the other moving average, then came back down below. So from my perspective, the trend changed back here. I know I was certainly going in blowing a trumpet, back in this area here, but we had then, of course, a reversal rally, but it came to what was starting to become a downtrending moving average resistance. So what I'm looking for is these moving averages. So in this case, we've already seen, in my opinion, the trend changing. We're kind of in the middle of that. That's why I think that I've mentioned this, that there's this strong possibility right now that we could see this further selling in the overall market, because these are multi-year events, as you can see down below. Okay, the least likely scenario is that it just turns around and goes back up. If it does, you know what? I will be the most excited person in the world, because you know what that means? That means that this market is in reality so strong, we're likely to go see Dow 20,000 over the next couple of years very quickly. If we fail to continue the selling, so if the sell stops selling right here, this gets back above here, it's not likely just to get up to this area right here and then roll over again. It's likely to go and firm up and then ultimately move on to much higher highs. So, Craig, to answer your question, first of all, what I know the trends change, in my opinion, the blue line on this monthly chart is broken to the upside or to the downside, and also then it starts to turn back the other way. So here you saw it had this nice trend. It started to turn. And because these are multi-month events, when they start to turn, it's a significant long-term, long-standing event, okay? So here now you see it start to turn and roll over again. So what I'll be looking for eventually is then for it to come down and start to turn and roll up, and then we're going to be starting to talk about a whole lot of buying, okay? So there you go. Robert, I'm going to head on to the next one then. Okay, so let me get back to the chart here that we were at. I want to just go ahead and make sure I emphasize enough, because I can't remember how much time I had to talk about before we had that question. The RSI 14 period. I want to just go ahead and note to you that I feel this is a really important and a nice, indicator. You see here, here again, Craig, when you're looking at the break above the 50% level, it led to a nice multi-year rally. When we broke back below the 50% level, it was the converse. Same thing here and back here. When it broke down, this kind of ties to that moving average you'd seen. So what I'm looking for is things such as the moving average to roll over if we're looking at sells, to crest and to trough and start to go ahead and rally if we're looking for longs. And then I'm looking for a confluence of that with this 14 period, in this case RSI. Nonetheless, it's a traditional RSI. You can get that on any free charting package out there, nothing proprietary. So let me go ahead and then again, this is just the S&P monthly chart. I know I'm throwing a lot at you. I know you'll be able to watch the video, over and over again. But I think you're already starting to see, there's some different things here that you can add. You don't necessarily have to add all these to your arsenal. I'm not saying that you have to, but to be successful. Many of you are at different points in your careers as traders. Some of you are brand new. Some of you have been around for a long time and just need some additional clarity in certain areas, whether it's setups and entries and exits, whether it's the interpretation of the charts to know when you should use your fantastic setup and entry. So what you can do is take each of these different charts and these different things I'm showing you, go back, look at them in time, and then see, okay, yeah, that's one that I want to definitely add to my arsenal. These are the ones over the years, over the time, that I found to be of benefit to me. Okay, and that's why I want to share very openly with you exactly what I use. Now, this one we went ahead and we already actually covered earlier, I believe, the 190 period simple moving average of the spider. That's again a 10-minute interval. I think Paul asked that question earlier, so I want to make sure we just revisited that. Go back, test this indicator, and see if you can see where we get a lot of touch points on intraday basis and how this might work with your, your style of trading. Some of you have more longer-term intraday perspectives where you're looking at holding for hours. Some of you are looking at holding for the next 5 or 10 minutes, and knowing where those resistance levels are could be of benefit for you. And so that's why I'm going to show some of that, as we get into the setups and entries next week. The SSO, I actually have that on here. I'd like to show you. I'm not sure who asked that question earlier. I think it was Jeff. And what happened is, I think the SSO has, like I said, validity. I do not personally trade it, but I know that there's people out there that do. And so I went ahead and, started putting a chart up there because I seem to get the question every once in a while, hey, what do you think of, this SSO? So what I'd like to do is show you, these 3 moving averages. I use them as kind of a fan, type thing. What I'm looking for is, in particular, things like this red line across below the blue. That's one of my indications of a trend change, and it's kind of this whole fan type thing. The shortest term moving average should be above the red, so the magenta above the red above the blue is kind of the strongest trend. Okay, and guess what? Yeah, you can apply that in the S&P E-mini just just as well. But this happens to be something I put up specifically to help a couple of you that had asked me questions. So let me go ahead and get you the specifics on those particular moving averages. I told you guys going into this I was going to be very open and honest with you, give you the different indicators that I use, and that's exactly what I'm doing. And here they are, the 10, 20, and 30 period exponential moving averages make up this chart. And yet you can see at a glance, and this is again on a 15-minute SSO chart, you can see there's a lot of validity and a lot of usage to that. I'm not sure. I know that in the 90s in particular is when I went back to what I could refer to as the gurus, the guys that are really good at taking money and not really good on giving a lot of information. They were never giving me, at best they might give me a moving average or two of what they were using, but it just seemed like nobody would ever give you a lot of anything. They'd show you some charts and then they'd say, now here's my indicators you need to buy, or here's my advanced course you need to buy to do the next thing. I hope you've all seen here through this process that I'm just trying to give you the real deal and give you the real information as I have it without having to go buy proprietary indicators and whatnot. So the 10, 20, and 30 period on this SSO, Jeff, I hope that you will see some good usage out of that. Okay, daily SSR levels. I'm actually going to reserve this chart till the end because I want to go ahead and show you a little bit more about how I go ahead and determine these levels. And the good news is we're kind of getting ready to transition into, we're going through the last few charts here, and then we're going to get into these extra kind of little segments. So I'm going to hold off on this one just for a few minutes, and we'll get back to this for you. Excuse me, I gotta move this down a little bit here. Okay. right, now the VIX charts, we've gone ahead and we've reviewed both the VIX charts. That's this one here and this one here. So the next thing I want to do is review crude oil. And crude oil here, actually my lines got deleted off of it. I'm not, oh, I see why. Hang on a second. Remember I told you I maneuver my charts every once in a while. There we go. I don't know how many of you recall my video. I did it just a couple months ago on crude oil. This is where technical analysis and knowing the markets and knowing price action really come in. First of all, you don't see a bunch of fancy indicators on here. There's not even a simple moving average, an MAC, nothing. Just price action. And what's important to note here is, and what I noted in that video that I did on YouTube, is how we had this long-term, nice 45-degree angle uptrend. That's what you want to see. In an ideal world, that's what you want to see on any stock investment. Nice long-term uptrend. Now, if you're a trader, you obviously want to go ahead and see this because you want to be in and out. But in the real world, for investors, this nice 45-degree angle is what you're looking for. However, what happens, what normally happens is that this is what it looks like when you get kind of a parabolic blow-off move. Okay, in your average stock back in 2000, 2001 there, what was happening was you saw all these tech stocks and a lot of different stocks that had been rallying up in the 90s like this, all kind of started going parabolic. For any of you that were around back then, you'll recall what I'm talking about. Well, this is usually where it ends, okay? You get this parabolic blow-off, and then the thing rolls over and dies a horrible death. What happened was we had, in my opinion, a very unusual occurrence where, and that's why I denoted in that video, was that we had the ultra parabolic, and I think I should refer to it as such, this ultra parabolic, move, which is just absolutely, completely unsustainable. This in itself is unsustainable, let alone this. And sure enough, we've almost erased the entire ultra. In fact, we actually have. You look at technical analysis here for a minute, and you see that we've come all the way back down now to the crest of the regular parabolic move. I mean, there's no coincidence there. That's support and resistance. You hear people that go ahead and they sit there and make fun of support and resistance levels. Well, any of you that have been watching my videos, I assume that's why you see how well that stuff can work. And here, just on a macro level, again, this is a weekly crude oil chart. You see that we go ahead and have a nice move right back down to this level here. So what we're looking for here, and this goes back to the S&Ps then as well on an intraday basis, you get a nice trend, and then eventually you get a capitulation, and then you usually smack into a resistance level, and then it rolls over. We're looking for these kind of moves on the S&P mini, even on an intraday basis. But when for you investors, this is very important to denote as well. And I know this is just a crude oil chart, and I wanted to show it to you as such, but I guess I kind of wanted to teach a concept there as well, which is when you see your stock that you're invested in going hyper parabolic, it's, in my opinion, certainly if I'm in a stock like that, I would be gone. Any kind of investment that I'm in, I'm going to be leaving. Any kind of trade that I'm in, I'm going to leave during this hyper-parabolic stage. Why? Because it's unsustainable. Okay, and so that's your time then into that strength to go ahead and sell. So spent a lot of time on that, but I kind of wanted to show you because it is a revisit to a chart that I showed you a couple months ago, and we're talking about very similar things about the unsustainability of it. And sure enough, that kind of all came to roost. So let's go ahead and move to the next one. Only got a few more here, and then we can get some support and resistance in that. Just want to go ahead and show you the crude oil chart, and having a tough day with it with my multi-symbols because I don't know what happened here, but this was a crude oil and the S&P E-mini chart, so I apologize about that. There we go. Now it's back to good. And here's what I want to point out about this. I was actually asked that question a couple weeks ago, and I had addressed it at the time, and I want to go ahead and make sure with you, of all people, that I share that with, which is when CNBC and these different news channels and all the I don't need to exclusively point at CNBC, but the news medias as a whole, the way to use groups like that is to find out what they are professing, what they are pumping, what they are I guess pushing as the flavor of the day. Because what happens is, you recall several weeks ago, crude oil was the flavor of the day. So when that was the case, the crude oil to ES charts had a lot of validity. So what we were looking for was relationships. When crude oil was the highlight of every day, we were looking for, okay, if crude oil goes up, the S&P should be going down, okay? And of course, this is just the opposite. This is crude down here, just so you know, and this is the S&P. But the point being that when it's in the news, when it's an issue with the news, and the news is making such a big deal of it. Just a couple of years back, 3-4 years back, it was the bonds. In the late 90s, it was the bonds again. Whatever the market is making an issue of the day of, and it's over the course of several weeks or months, you want to go ahead and have a chart to denote those relationships, so that you recall a couple of our trades back several weeks ago, because crude oil was the flavor of the day still before the hyperparabolic blow-off. We were looking then for crude oil to be going up, and that was your next nice little sell-off. And when we were noticing that the indexes were no longer selling off with the crude, we were looking at that being a short-term bottom near support and looking for long opportunities. So the theme I want to make sure you understand with this real quick, and that's why I'm spending some time on it, is there's frequently a flavor of the day, whether it's gold, whether it's bonds, whether it's currencies, whether it's crude oil. The market likes to find something to focus on, and if it's an index that you can put up against the S&P, then you can use that as a barometer of, are the cells selling, and because sometimes you get a better technical signal out of like the crude oil, like, okay, crude oil is actually getting ready to make its next rally. It might be a little clearer, just like the Dow Jones Industrial Average chart is sometimes a little clearer than the S&P chart, so I use that. So understand what CNBC, Fox Business Channel, any of the different news media outlets are out there are pushing as causing the market grief or benefiting the market, and put that up there as your flavor of the day inverse relationship chart. Okay, that's why I wanted to go ahead and convey to you there. Now, as we finish off these last couple charts, I want to go ahead and show the Dow futures chart here. This is the Dow Jones. Could everybody raise their hands real quick that trades the Dow futures, please? Okay, get some hands raised here. That's good. Yep. If you trade the YM, yeah, go ahead and raise your hand for me real quick. Okay. So we got some YM traders in here. That's good. Good to know. So I'm going to spend just a moment here. I want to show you this. Again, for me, I personally prefer the S&P. Does that make it right? No, that doesn't make it right. That's what works for me. However, something I want you to note. You recall, I wish I had everybody on voice right now. I'd love to do one of my little quick polls. What are all these again? What's this blue line mean? What's this red line mean? What's this green line mean? I hope you're all saying to yourself right now, well, that blue line was the S&P, or well, the daily pivots. In this case, it's on the YM. This was the daily pivot points for the blue. The green were the weekly pivot points, and the red were the monthly pivot points. Now, what I want to point out to you is on the YM, and this is just my experience again talking, but I want to give you that helping hand for those of you that raised your hand there, that the pivot that I find to be most important, and I know on the S&P chart is to some degree as well, but all the pivots seem to work pretty well on the S&P. But on the Dow, the pivot of choice is absolutely, in my opinion, the primary pivot of the day. Every day you should know where the primary pivot of the day is. Okay, and I know you got the little bar over here blocking, but you can see the price got up to there as well. Let me move that over. See how where the primary pivot is each day, there seems to be price support and resistance. Okay, so I wanted to give you that helpful tip that if you're trading the YM, be very mindful of where that primary pivot of the day is. Do some of the other pivots work? Yes, they work, but with the from a reliability factor, the one that I found works the best with the YM is the primary pivot of the day. Okay, just wanted to give you another helpful tip there that could be the difference between a profit and a loss. Okay, stocks. I've done some videos on stocks. Could I go ahead and just get the hands raised real quick of everybody that trades stocks, please? Ah, wow. Okay, I'm impressed. Okay, great job, guys. Thank you very much for that. Okay, a lot of stock traders. All right. Well, I hope everybody's gone ahead and taken a look. Let me remind you of a couple of videos then that I can recall offhand. February 29th, 2008 YouTube video. April 7th, 2008 trading video. Those are two that come to mind. I did, there was different stock requests that came in. And for whatever reason, it just seemed like those stock requests kind of all came in very close together, and so I actually decided, okay, fine, I'll do a little stock segment for people, and then I went back and revisited that information, a month or a little over a month later, to see kind of how that analysis worked out and everything. So the point being is that there's the technical analysis that we teach. There's a lot of great opportunities. This chart here is Apple. Let me go ahead and move this over here real quick. I want to get some of the moving average stuff to show up. There we go. Okay. Now, here again, this is a 20-period moving average, and you see that on this 20-period moving average, in fact, let me just give you the actual, while I'm thinking of it, I don't want to, since there's so many of you here, I don't want to forget this by accident. This is a 20-period exponential moving average and a 200-period simple moving average and a, guess what, Old Faithful, 21-period RSI. Okay? So what do you see here? You see right back here, we had the 2-bar break above, a 1-bar pullback, and then a resumption of the uptrend. You recall from that video, I was actually specifically talking about this whole gap here. So I'd encourage you to go back and watch those videos, the point being that you can see how the analysis works. I'd also like to point out, look how that tied nicely, this area here, with the break back above the 21-period RSI. Look how when we got back down, let me move this over a little bit for you. Okay. Here, we got below the 21-period RSI. We had the nice break, and that led to a heck of a sell-off after breaking the 20-period moving average. And we ultimately had a couple-bar break. And that's why next week's setups are going to be important, because I'm going to talk to you about a lot of setups outside of the, 2-bar, consecutive bar down, 1-bar, that very conservative one. I'm going to be giving some strategies next week on just that kind of, these different kinds of setups that you can use outside of this conservative one here to take advantage of these breaks. But for stock traders, the analysis and the things that we're showing here are as applicable, and that's what I was trying to demonstrate back in that those past videos. Okay, and here again, the RSI, the moving averages. You don't need some several $1,000 black box indicator gig to go ahead and help you see a break and then see a bunch of red lines, or a break above the 20-period moving average and suddenly see a bunch of blue lines. But for a new person looking at this, it looks very attractive. Wow, if I just buy that indicator, it'll always tell me when it's going up and it'll always tell me when it's going down. And I try to hit that home because I hear the horror stories, and look, being honest about it, I'm one of those guys that did that same thing when I was constantly searching back in the early 90s for that magic indicator, that one thing that was just going to make me rich overnight. And in the end, I realized, what, I had to pay my dues. Robert, am I hearing you?
Yeah, can you just verify on the pivots that you use, they're based on all trading sessions?
Yes, absolutely. Great question, guys. Absolutely all, the whole session, not the daytime session only. use the entire session. You know, and let me clarify that for a minute. Back in the 90s, I would have given you a different story. I would have told you the pit session only. But I saw the transition happen. I mean, look, any of you that have been around for years know what I'm talking about. When you, in the late 90s, when the volume was thin, I mean, you know, there was hardly nothing being traded overnight. But, you know, we've had the things such as the London bombing, you know, an overnight trade. You know, we've had things like 9/11 out there and a lot of different activities and things that have pushed our markets to electronic trading. The pits are closing up. People are moving off floor. They can trade in their underwear. I hope that doesn't offend anybody, but they could trade, you know, in their pajamas, you know, overnight from the comforts of their home. They don't have to drive down to the pits anymore. So more volume has been added, even at an institutional level, in overnight trading. So now the validity definitely lays with the overnight session. Okay. All right, so let's go ahead and get back to this. We're basically, so that was stocks, and that was the last thing I wanted to show. This was my actual code. I just wanted to verify. You know, I said in the interest of openness and honesty with you. Here you see my ADX study I was telling you about. This was, you know, my Rob's. Here you see Rob's ADX DMI. It's a 7x7. Okay, I'm very particular about that. I want you guys to know I'm not pulling a fast one on you. You know, keep my integrity. So, you know, that's, you know, 7x7 was that one that was denoted as Rob's indicator. Okay, so that's the charts there. Now, I really want to spend some time still. You know, we're already at you know, 2 hours and 20 minutes of seminar time. So I've lived up to my promise that I'm definitely going to be going over. I'd like to spend some time still talking about support and resistance levels. So I don't know if there's a couple questions, Robert, maybe that would be good to answer, or we get into this, or should we get into the support? What do you have there?
I think we're okay for now.
Okay, great. Then what I'd like to do is go ahead and get up a couple of different things for you. I want to go ahead and talk about how we create these support and resistance levels some more, and I want to show you, you know, a couple different things. Now, we've talked about one of the key, in my opinion, fundamental areas, and I can't denote that enough. It's very important. I see in the chat room people that have been watching these videos for several months that still aren't paying as much attention as, in my opinion, I would like to see paid to these pivot points. Okay, the daily, weekly, and monthly pivot points are a strong part of what, you know, they're one of these strong parts, but they're a strong part of what makes up my numbers. Now, let me go ahead and I think I have to change over real quick. So let me switch over to something for you so you can see a different chart. Okay, I believe everybody should be able to now see my web page with the key weekly levels. Robert, would you agree? Is that what you're seeing?
Yes.
Okay, thank you. These levels are derived from daily, weekly, monthly pivots, Fibonacci numbers, physical price, and I'm going to review these with you more in just a minute, but I just want to explain this. These levels that you're looking at here, these real numbers that I post each day, primarily on the weekly and monthly pivots, not so much the daily. The daily is when I see a confluence of them keep reoccurring at the same price, but they are still nonetheless daily, weekly, monthly pivots, Fibonacci numbers, price support and resistance levels, where price has actually gone ahead and pivoted at. Also on multiple historic touches. And so I'm going to go ahead and demonstrate some of those things for you now. But those are some of the key things that these prices are actually derived from. And then there's a little bit of an art on how I get some of the numbers and move some of the numbers. So I'd like to spend a little bit of time still going ahead and sharing that with you. So let me just go ahead and, with that said, get off of this screen. I actually want to show you this. This is kind of my pre-website area of work, if you will. What I want you to see here is that there's kind of a lot of effort that goes into these. I end up kind of having to take a lot of the raw numbers and then breaking them down into, subset numbers to try to get you the right levels, for the day. And so let me go through that process a little bit, okay? What I'm doing is I'm taking into consideration all of the different levels, the pivot points, the Fibonacci numbers, the price levels, and then I'm going in and kind of plotting them on my charts here, okay? Then what I'm looking for areas where the price seems to be like stuck in a particular area. What I'm referring to is like like 96.50, I think, was one of the areas. Yeah, you see here how 1296.50, 1297.50, or 1297, I'm sorry, 1296 to 1297 was an area. This area was coming up as an area of multiple hits by different numbers, and that's why I had kind of these little dollar signs over there. What I did, though, was because it's kind of senseless to have, I don't like, if I can avoid it, having a band that says 1296 to 1297, because especially in the last month, there's been so many bands that are starting to roll up on each other. When we moved to a new area, like when we moved down to this area, we had a lot of open space at first. We had 5-point, 10-point ranges between some of the bands. Now, because we've churned in this area for so long, we've got so many support and resistance levels, which is, by my own admission, is very frustrating. They're very important nonetheless, but it takes away, it kind of turns you from that position holder into more of a, okay, you know what, I'm going to take at least half off at that first level, even though it's 2 or 3 points away. Then I'll go ahead and I'll move to the next level and take the rest off. You can't just sit there like I did. Remember a couple months ago, I remember there was one short. We hit my resistance level. It was a short, and there was 10-point profit down to the 90 level. That's the kind of thing that is really nice to have, where you hit the level, you've broken resistance, you have a nice opportunity to sell, and you can make 5 or 10 points. That's the ideal situation. But in the real world, when we're in the situation like we are now, they wind up on each other. Well, to help with that a little bit, what I try to do is find areas that are congested, and I look then to minimize. That's why you're starting to see, for instance, some of the 96.50 numbers. When you're wondering, well, where did 96.50 come from? It came from the fact that I saw multiple levels between 96 and 97, so I split the difference, especially with the E-mini anyways. And we're going to talk about this in setups and entries next week, but as price is approaching these levels, there's certain things you should be doing with your trade anyways, so that extra half point shouldn't be that big of a factor. So go ahead and understand that if you see things that are like 96.50 or other 50 levels, here you saw 60.50, because the 60 to 61 level was so important, it ended up becoming 60.50. So that's kind of one of the first things I do. I plot all the different levels on here. Then I go ahead and I find the areas, and what these little asterisks and dollar signs are, and asterisks and dollar signs, that's just where it's like, wow, okay, I just had a ton of levels. Now I'm coming into, let's say, the next week. Wow, I'm having that many more levels on this. This is just like a mega level. Well, okay, and so that when you see that confluence, and see, a lot of you aren't seeing that confluence right now because you're asking me, well, Rob, which are the important levels? Well, the important levels, the reason why you're not seeing them is because you're not doing the numbers. That's why I want you to start doing the numbers. I'll keep posting them on the website for you, okay? Not a problem. I'll post them on the website. But for you to start learning which ones are important, by doing this yourself, you're going to go ahead and, get a better feel for which ones are important. Now, that being said, between my morning commentary, in fact, I think I see one of my levels right here, 56.50, as I recall from yesterday, was the key level of the day. And guess what? Look at all these asterisks and dollar signs I have right here, okay? So, and I denoted that as the key breakout resistance level, and I'll show you that chart in a minute. But so what I'm looking at is, again, this confluence of circumstances, all of these different charts or pivots, Fibonacci numbers, and price support levels coming together. Then I break that down. I try to split the difference on as many of them as possible, and consolidate them as much as possible to make them as reasonable for you as I can. And that's really just years of experience trying to convey that. I guess the best way to help you understand that is things such as splitting the difference, trying to keep the bars within 2 to 3 points ranges if I can. But there are some bars right now that are just so big. They're 3-4 point bands, and you see they're huge support or resistance. So what I would say to you when you're asking, well, how do I know which bands are more important? One of the first things I'd say to you is, how thick is it? Okay. Don't use that as your only guide because it can be deceiving. There was one of the bands up here, 7850, okay? Look what happened. 7850, I told you that. Look at that. It had multiple levels. Okay, well, guess what? On my chart, it's going to only show up once, like one bar, a reasonably thin bar. It's not a super thick bar. But look at how many hits went into that. Numerous hits between 1278 and 1279. So I went 1278 and a half, but you see then I had all these asterisks and indications here that it was mega. Well, you get down here and it will look really small to you, okay? So that's why it's good for you to do the analysis so that you'll see it. Otherwise, what you're doing, you'll rely on me going ahead and posting it up on my website or me posting it in the daily commentary. And that's worked very well. But nonetheless, trying to go ahead and help you do this for yourself, so that, like I said, I don't want to be a guru. I want to help you, and have you guys tell a lot of people that this has been a great experience for you. So I'm trying to give you honest information and very helpful information that you can use to be, more successful as you go forward here. So I'm just trying to lay it all out on the table for you. You know my style. If any of you have been from me for 7 months, I just tell it like it is, and I hope that's worked for you guys. And I assume it has, otherwise you wouldn't be here is my hope. So, just understand that I really would love to see you guys do this yourselves and then go back and check it against my levels, okay? And that's how you can start seeing more and more, are you on the right track? But at first blush, look for the thick levels. Robert, did I hear you click in?
Yeah, we have a couple questions. One is, do any of the levels ever go away?
And the short answer to that is not really, because the market has price memory. Let me go ahead and, if I may, show you something. It takes just a second to move all these charts around, with the webinar software, so give me a second. Let's not go ahead and forget right here. Does anybody really think it was a coincidence that we hit this level right back here in 2000, the middle of 2000, and then all of a sudden here we are, 7 years later hitting basically the same levels? I don't think that's a coincidence. It's a long-term double top. Anybody that studied, I have some books that I put up on my website by like Edwards and McGee, stuff that's been around from the early 1900s. And that's why I really like that book, by the way, just so you guys know. I think it's a great book. I think they're on edition number 8 now of that book. But that book was originally written way back in the early 1900s, Edwards and McGee, technical analysis of stock trends and that. These double tops, triple tops, V bottoms, W's, all these countless patterns out there over time. My point with that is the markets have stood the test of time. The markets, are acting very similar today than they were, back in the early 1900s. We still have double tops. We still have triple tops. We have divergences. Moving averages are still working. And yet everybody's known about this stuff since the early 1900s. So when people say, Robert, how can you go ahead and share your stuff and still be successful? Everybody's going to go ahead and, ruin your ability to make money. That's not true. Let's be honest. I go and do these nightly videos, and how many of you have struggled along going ahead and or watched, not necessarily you, but go ahead and you've watched people in the channel completely go ahead and distort something I've said. there's a one-bar pattern, or the market hasn't even broken out. They're calling out, oh, I think it's broken using Robert's system. I've sat with people. I remember back, this is a quick war story, but in the late 90s, I was doing a lot of teaching for the American Association of Individual Investors. In the community I was in, they happened to launch what they call a SIG group, special interest group, and there was a lot of older individuals, men and women, that were trying to be more active with their money because day trading was becoming popular back then. In fact, I was on a TV special about that, and I remember that everybody was trying to be more active with their money and stuff. I went over to a guy's house because he lived in my area. I showed him a whole bunch of great things, and by the end of the day, he was still managing to go ahead and put his own spin on things, and that's what everybody's going to do. Very few, very, very, very few people, I think, are going to trade identical to me. I would hope that many of you will find a lot of good opportunities to better yourself with the things I'm showing you here. I'm showing you a lot of great things that really do work. They certainly work for me. So I'm hoping that you'll be able to add some of these things to your toolbox. But I doubt that anybody is going to trade identical to me. And here again, we have these books that were written in the early 1900s that are as applicable today as they were back then, and yet people still manage to make money and people still manage to lose money. So what the whole point of all that was with the question was, here we can see a multi-year event right here, and price levels still apply. Price has memory. Okay, and there's a lot of reasons for that. People get trapped in different prices. I mean, let's think about that. How many people got trapped at the height of the internet bubble? How many people bought these internet stocks at hundreds and hundreds and hundreds of dollars a share, only to watch them catch the top and watch it go down? And what happened? Day traders became investors, and when day traders become investors, what they're sitting there doing, and I've joked with you all about this before, there's like, please God, please just let it come back to me. My dog is going to leave me, my wife is going to leave me, my husband's going to leave me, the family's going to disown me if this thing doesn't come back. And so they're holding and hoping and wishing, and sometimes that works, many times it doesn't, but they're holding and hoping and wishing, and when it gets back then to that price, they're like, oh, thank you, I can finally dump this dog, and they go ahead and they sell out of it. And this is a multi-year version of that, but you see that on a double top, double bottom kind of basis all the time, where people, and then you have your technical traders, of course. You have, at the institutions, you have whole groups of people that are getting paid very large dollars to go ahead and manage a great deal of funds on a technical basis. So, and they're looking at those same charts, focusing on those key levels. So in summary, those are the reasons why I keep the levels on there for the future and seldom ever remove them. Unless they turned out to be insignificant. If I put a level on and it goes ahead and proves out never to show any validity when it actually is worked, when it's, as price is trading through it. So if I have a level that's right here and it goes through it, comes back up it, goes through, well, when we eventually trade away from that area, I will remove that level because price never proved any sort of reliability around it. But how often really does that seem to happen? Most of the levels seem to have some validity around them. So, but I will remove only if price is proven not to honor. I may have miscalculated something. When I'm doing a Fibonacci retracement from here to here, I may have written down the wrong 50% level, the wrong number. It had a Freudian slip, keyed in the wrong numbers at the time. I mean, I don't know about you guys, but you guys see how poorly I type in the chat room. I certainly, at the same time, go ahead and am subject to superimposing a number. So instead of 1256.50, might put 1265.60 or 1265 even or something like that. Superimposing a number, and then that number doesn't turn out to be valid, and I eventually go ahead and remove it. So, but except in those extreme circumstances, I don't remove the numbers. Okay, Robert?
I think we're good.
Okay, so what I'd like to do is get back to the questions here. I know we're about 2 hours and 40 minutes. I hope everybody's okay. I guess I should ask that question real quick. You guys okay? Do you mind me keep going a little bit? Everybody put in the question thing, yes, it's okay to keep going, or no, wrap up?
I think we have about 30 yeses. Keep going.
Okay. All right. Excellent. Great. Thanks, guys. Appreciate it. Sorry, I do this on the YouTube videos every night, and that's why it takes so long to edit them. But, there's so much I want to share. I'm excited that you guys are here, and I want to go ahead and, give you guys something back and give you more time. So with that being said, I want to go ahead then and, just focus on a couple of the other places where the numbers, come from, and that's this chart here. So we talked about the pivots. Now, what I want to go ahead and focus on as well, actually this is not the chart that I wanted, I apologize, that was one we were just looking at. Here we go. Okay. So one of the things that I look at when I'm determining my pivots, in addition to the pivot points that we've talked about, which are mathematical calculations. They used to be called, back in the day, you were called floor pivots is what they were called. These days that's not really, frankly, the truth anymore, but people still know them as such. What I do is, in addition to those daily, monthly, and daily, weekly, monthly pivots, I also use the Fibonacci numbers as well. So what we're looking at is I find relative peaks, recent peaks, and this is a real peak right here, down to here, okay, which is this point right here. And then I use the standard Fibonacci numbers, and not the 25 either. It's the 38, the 50, and the 62%. Those Fibonacci levels will show up as part of my numbering process for the S&P futures. Okay, so this is on the daily chart here, but I'm showing you an example of this. Let me go ahead and pull up the actual daily chart here. Give me a second. Where'd it go? Sorry, guys, bear with me just for a minute here. Let's just use this and be done with it.
Okay. And while you're doing that, are you going to be covering the intraday levels, also not just the end of day, week, month levels?
Yeah, you know what, let me go ahead, let me just finish off this thought, and I actually, back on that chart that we were at a little bit ago, that's why I was actually back there, I forgot that, I wanted to show you some of those like Dow levels and everything, where those things came from, but yes, let me start with this, Robert, if I can, and we'll work our way down. So going to the daily levels, first of all, the longer term levels, what I'm looking for, I look at the daily, weekly, and monthly charts for price pivot points. What are price pivot points? I want to make sure you guys all recall that from a video I did. Gosh, I want to say it was like 324 and 330 of this year, where I did kind of some introduction to the support and resistance levels, March 24th and March 30th. Sounds about right. First thing I'm looking for, and we'll start with the macro, more of a high level here. This is a weekly chart. I'm looking for every one of these price pivots. A price pivot is where you get like the apex, or you get like the bottom, kind of this V formation, okay? So I'm looking for wherever those levels are at. Those are very important concept for you to remember, okay? So anywhere you see these levels right here, that's a level that needs to be part of your arsenal. Now, you can see these two right here. These may be close enough where they end up getting merged into one level. But what I'm looking for, everywhere you go where the price took a hard turn, that's what's called a price pivot. Okay, so I'm looking for those, and of course then extending those out all the way across, getting your level. eSignal does a great job of helping you with that, but depending on how you do it, just make sure you're extending them across. If you're using an old paper chart, I used to do that in the early 90s. Go ahead and draw them across and then denote the level. Okay, that's another key level. In fact, what you have to understand is floor pivots, as you saw how well they work, they're a very good tool. But in the end, floor pivots, while they're mathematically based on where price is traded for the previous day, nonetheless, it does not guarantee price actually has traded at that particular level. Okay, whereas in this case, the price has gone ahead and actually traded at these levels, and the market has proved, in this case, buyers were willing to step in here. Buyers were willing to step in here. Sellers were willing to step in here. Same here, sellers, okay, sellers. So these V tops and bottoms, these price pivot areas, are areas where we've demonstrated. Now we have market memory that can help us. So what is one of the strongest levels of price support or resistance? It's based off of one of these price pivots, because price actually has traded at that level. Okay, very important. Very important to remember, price pivots. Now, what does that mean to us anywhere else? Well, that's exactly then how I transcend that to the intraday basis. And I like to use hourly charts as one of my key indicators of price charts, okay, or price pivots. Let me back up for a minute. I focus more, the numbers that wind up into the weekly numbers are focused more off of daily and weekly numbers. However, when I see price touching multiple times at a certain area, I go ahead and make note of it. So, for instance, let's go ahead and, here you can kind of see right through here, price is touched several times. I hope everybody can see that. Here we got multiple touches. Here, when we broke that level, look at how it led to the sharp sell-off. The retracement gets right back up to that area, and then it dies again. Price touch, touch, okay? So what I'm looking for is areas where price is proven multiple times. So you can bet on the upside here, this 1265 is 66 area is going to be important. Now, if I recall correctly, bear with me for a minute. I want to pull back up my power charting thing here. Yeah, and let me show you guys something real quick. Okay, hopefully it's flipping you over here any moment now back to the website. And what you'll see is there's that number range right there. Okay, so my point is, you see this synergy, you see this confluence of circumstances. You get daily and weekly numbers giving you these kind of numbers. Then you're seeing the intraday activity giving you the same ones. You can bet on the way up, this is going to be an important level for us, much as 5650 was yesterday. In fact, let me go ahead and show that. Okay, in a moment, it should be flipping back to the intraday for you. And let's go ahead and get this broken down to a 15-minute chart. You recall in my morning commentary yesterday that I denoted the 5650 level, I believe, as one of the key levels. And there's 5650 is right about there. And sure enough, we had hit that level here intraday, and we hit that level here intraday. I mean, precisely. In fact, I actually called that out in the channel, as I recall, because it was precise to that level. Let's break it down to a 5-minute chart. So, and let me get the thing up here for you. I mean, there it is right there, 5650. It came right up to that level, So the 55, 5650 area was a key level. And my point with this is these are all based on where price is traded, its activity around that. Because now, see, you extend that out and look at that area right here. Okay, and that's one of the reasons that was on there. That whole, 54, the 5650 area was important to us because price was proving itself out in that area. And then we got into the early morning, session, and sure enough, we got stopped out in that area, only to have us retest it again. These levels worked very well. And so where I'm getting them again is price trading action. Where is the price trading over and over and over again? Look at let me get the thing on here. Let's draw the line right across here. Okay, the 40, you recall from the other day how important the 41 area, I believe it was, had been. Sorry, my voice is going a little bit. I'm not used to talking for 3 hours, but here we had multiple tests. When it broke this area here, it led to a sell-off, rallied back to it, and we had a move above it, only get right back below it, and then a retracement to it. I mean, over and over again, this 41 level was proving itself. Well, if you look at my weekly numbers, you know that the 41 was actually a level. So what I'm saying is there's validity to this information. And the way these are formed, in part, is looking at things such as the hourly charts, and looking where price is traded. In the hourly charts, the 15-minute charts, that's how I use the intraday levels to see where has price been trading, and touch points. Where are the touch points over and over and over again? That's the key here. Where are the touch points? When I look at this chart, where is it sticking out to me that things are trading over and over again? That's how I determine the price support levels from an intraday trading activity basis. Okay, so now you have the intraday. You saw on the more macro level how we do it on the weekly and monthly type charts. And so now the other thing that needs to be reminded of is the Fibonacci numbers. And so what we do with that is, again, so here's the S&P daily chart. What we're doing is going ahead and using the Fibonacci retracements and going ahead and grabbing your levels. And again, the key ones that I use, I know that there's a million levels that eSignal offers between here. The ones I really use are the 38, the 50, and the 62, more conventional in nature. Particularly the 38, particularly these three. The 25, that's basically an accident. Why that's on there, it shouldn't be on there right now. But because you can go in and select these constantly. I mean, I've heard somebody say it's at the 25% level back when I reactivate it, but I only use these three right here. So, and that's very important because this is in part what helps make up these numbers. And now, I think all of you will recall, you've heard the 1320 area is heavily on my list of numbers. There's kind of a nice band in there, and one of the reasons that'll be an issue when we eventually rally is because of this retracement amongst a confluence of other indicators or time things that had triggered in that area. We also have the price action right at that area too, as you see. So there's kind of a band of reasonings. When we go to the upside, you'll hear me talking about that. So it's based on, again, the retracement levels, those key retracement levels, the daily and weekly price and intraday price action levels, which is price reaction levels, these pivots. Okay. Very important for you to understand, and that's why I'm hitting you over and over. I'm sure I sound like a broken record, and I apologize, but I want to make sure that I drive that point home. So those types of levels all make up these weekly levels. So what I encourage you to do is, after this video, start doing this now. Go back to your charts, look at the S&P Mini, do the Fibonacci analysis, go ahead, look at the daily charts, look at the weekly charts, draw across these these pivot levels or these price pivot levels and mark them down on your chart. Then go ahead and see how they kind of start to match up with some of my levels. That's a great way for you to learn, so that if I go out and get hit by a bus tomorrow, that you guys can continue on and fight the good fight and do good trading. So Robert, did I hear you click on the mic?
Yeah, a couple things. First, Joe was kind enough to remind us that the videos from March 24th and 31st cover pivots.
31st, yes.
On the YouTube videos.
Okay, great. Thanks, Joe.
And There are a couple questions. First is from Chun Lin. For price pivot, the sharp spike top bottom or high low hit is sometimes far from bar range. Do you use bar range as resistance and support levels?
If I'm understanding what's being asked, what we're talking about is, let me go ahead and highlight, like right here is a bar, and it's a very wide range bar. If I heard the question correctly, in fact, let me clear a couple things off here real quick.
I think Joe also asked a similar question. Are there false moves between trading sessions in the S&P like there are in Forex? I think, are there times where there's a break, where it breaks through a level and comes back?
Oh, sure. Absolutely.
Like
okay.
sharp spikes that pop through. Maybe the momentum is just so strong.
Well, yeah. Unfortunately, I just demonstrated that a few minutes ago on the intraday chart. I showed that how the price had broken through, only to return right back to, I believe it was the 1241 level, if I recall correctly. I'm sorry if I didn't recall the right level correctly there, but I was demonstrating how the price had gone through the level, only to return right back to it after the pop. I got the 65. Maybe it's the 65 level. There was one of the levels I just demonstrated just a few minutes ago that was exactly that circumstance. Oh, here it is, right here. Yeah, this is the 65 level. Remember how we'd gone ahead and said, see here how I've been trading, and this is now the 15-minute chart. Okay, so it's a little more expanded. But you see, price was continually trading and reacting around this area, but this morning here on the 5th going into the 8th, on the 8th there, it opened up and gapped up through the level, but ultimately right away started sinking right back and through that level, then rallied back up near it and failed it again. So yes, absolutely, price can falsely trade through that level, but if it's a false trade, then it should quickly revert itself back below the resistance level. And that's one of the reasons why I do mention that conservative break strategy, the 2 bars up, the 2 bars down through a support or resistance level, to help us see if it is more of a valid break of the level versus just a false pop, especially on the open, like Joe has mentioned, between trading sessions, because that's where you're most likely, as we see right here in this case, to get that kind of false break. Okay? Was there another one, Robert, or move on?
Do you use weekly or monthly moving averages as primary intraday support or resistance, or do you only use these in confluence with your key weekly levels?
Do I use the weekly moving average levels? And the short answer is yes. I do, but it's funny, I actually use them more or as much on the Dow. So like those you saw the moving averages that were on like the Dow. I go ahead and I'll use those when I'm looking at like a weekly or a monthly chart, or like the S&P monthly index. In fact, in my nightly videos, I've shared that a number of times, how those moving averages on that monthly S&P chart are very important to me. Right now they're important to me from a trend perspective, but as we trade to that price, they become very important to me as an actual trading issue, because yeah, the higher the time frame, in many ways more validity. When you're talking about a multi-year event, like you saw that double top in the S&P that I showed you, it took 7 years to form. That's a multi-year mega event. I mean, that's something that is nothing to sneeze at. By the way, I guess with this mark here, we got a smiley face. So hello, everyone. The point is that gotta have some fun with it, right? The point is that yes, I absolutely look at the higher levels, and those moving averages do factor in, which is why I have.
How do you know when?
I'm sorry.
Okay, how do you know when it's a fake out or a break in the trade?
Well, if we're going to talk about trading strategies, that's actually going to be more next week. I kind of got to put that off to then. I mean, the fake outs and breakouts, and how we're going to then trade around a potential fake out or breakout. I mean, one of the ways that I know is that's why I have that conservative 2 bar strategy, because far more than not, if it has those 2 consecutive bars and that type of strategy. Now, there's many variations of that, and that's why I want to show that next week, in force, because there's some great ways we're going to talk about actual entries and exits. And actually, I had a video yesterday, or my intention, I did a trade yesterday where I was trying to actually demonstrate a great technique for you, and I didn't hit the record button, so I apologize about that. I had a senior moment, I guess. But I will hopefully have some videos to actually show as part of next week's session as well. But I'm certainly striving for that. And but we're going to talk more about how do you know, and if you don't know. I mean, trading is trading. Do you ever completely know? No, but you have the probabilities. And then the more importantly, okay, you see a probability, and then what does that mean? How do you trade that probability? And that's why I wanted to know what people trade size-wise around here, so that that I could actually do some demonstrations using your size, not my size. And so that's, we're going to talk a lot more about the, confirmations, and if you're not completely sure, more importantly, you don't have the 2 consecutive bar break, the light pullback on light volume, how do you take that trade then with more confidence? That's going to be a heavy topic for next week.
Okay. Lou wants to know, would you consider other fib levels under specific instances if there was a confluence with a fib or a pivot?
Hey,
or a
Robert.
fib extension or a pivot?
Robert, you know what? I'm really sorry. I don't know if anybody else is having that problem, but your audio got really garbled there for a minute, so I couldn't quite understand what you're saying. Could you repeat that question? I apologize.
Yeah. How do you hear me now?
Oh, excellent.
Okay. Would you consider other fib levels under specific instances, like if there's a confluence with a fib extension or a pivot?
Lou, that's a great question. No, I don't. And that's the short answer. I do not personally. If there's already a confluence of other levels, then the level has enough meaning to me. I don't need to start going in and getting cute with the Fibonacci retracements. Let me just show something real quick, if I may. Okay. There we go. All right. So I should do this on a clean chart, but if you click on this, look at how many levels there are here. I mean, if you actually selected all of these, you could just, go batty, looking at all these different levels. So there's already enough, and again, here's where traditional analysis does make more sense to me. The 38, the 50, and the 62 fractals were or numbers, whatever you want to call them, were more common. Then beyond that, what's common beyond that really is the extension points. Okay, we didn't really talk about those because we don't need to, because by the time you get to the extension levels, you've usually already gotten other levels that have gone ahead and made up the numbers just fine. So I don't talk about extensions. I keep it really clean in 62, 50, and 32. If there is, like I said, confluence, I'm not going to know about it. I don't really use a blue. Now, that being said, if you are comfortable using it, go ahead. Just for me, I said, it's my bias over the years of messing with them. I haven't found enough value in it to go ahead and start loading up all the different levels that eSignal makes available to me. By the time it's important enough to check off some of these other ones and that there's a confluence, my price action, my price pivots, my daily, weekly, and monthly pivot points have already given me the same answer, so I haven't chosen to do so. If you do that and you do some work with it and you happen to go ahead and find that seems to be really working for you, share it with us in our private channel, and let us know. But for me, that hasn't proven to be valid or valuable. I should say, not valid, valuable.
I guess extensions might make sense if you're breaking out of to a new high.
Yes.
There are no other levels there.
That's correct. And there's no other levels there. That's right. New high is where I used extensions back in the day. But right now, but the other thing is, keep in mind now, just because price hasn't traded there, remember, as you're making these wider and wider ranges, your weekly pivots will start to go ahead and remember you got the resistance level 1, the resistance level 2, and then you'll have the primary pivot. These levels up here are going to be way outside and are going to generally, as a rule, my experience, end up mysteriously being very close to where the Fibonacci extensions would already be.
And Wayne asks, do you use Fib in the daily chart only?
No, I don't use it only there. I do the weekly as well. But you know, I just was for the purpose. So really, the short answer is no. I do it on the weekly as well, looking at more macro trends, daily and the weekly. But I was demonstrating on the daily chart, showing how you're taking a price pivot level, you're taking a high pivot level and a low pivot level, drawing your extension to get your 50 and your 38 and your 62 and so on and so forth.
And Paul wanted to know, when you're drawing these lines, is it best to use crayons or pens or a pencil?
Oh, you're killing me, Paul. Let me know what your answer is. I'd like to know what he'd like to draw with. Was there another one, Robert? Or was Paul? I mean, I assume Paul was just joking around a little bit there.
Yeah. Well, Wayne wants to know if you use the fibs on the 15-minute too.
Hey, you know what, Robert? Your mic is breaking up again.
Okay, I'll try again. Do you use fibs on the 15-minute too?
No, I do not. It's too much.
Okay,
it's too much jiggling around price action wise in the middle of the day, and then I lose focus on my other trading activities.
Okay, that's all the questions I have. There's some more webinar related questions we might want to cover real quick. It's already after 10 o'clock or 12 o'clock.
Okay. Yeah. Sorry, guys. I hope this was good for you to go the extra. You know, I told you I'd do that for you, and so I hope that's a positive thing for everybody here. I guess I'd like to know so I don't go away concerned about that. Everybody is good and happy that we went over, right?
Yeah. Two people want to know if you look at the market delta.
Okay, thanks for all those comments there. I appreciate that. No, I personally do not, look at market delta or market profile. I think Stottlemyre's work has validity. Please don't take away that I don't feel that market profile has any sort of validity. I don't want to say that. I just want to go ahead and say that I personally don't use market profile because those areas of control that just usually, in my opinion, have worked out well with one of my support or resistance levels. And frankly, as you can see, I have enough work on my board as is, and more importantly, that market profile is, and that price action, I end up kind of seeing that as I'm already determining where my support and resistance levels are, because I'm seeing where the price is already touched multiple times and where the majority of the trading action is taking place. So for me, I've kind of developed these other things that kind of substitute, if you will, Stottlemyre's work. That being said, I think market profile has validity and it's great work and so on and so forth. So, okay.
The number one question is, when will the video of the webinar be available?
Well, I'm going to go ahead and, after I get off the phone here, start the download process, if you will, converting all of this work to video. And I will go ahead and work with Robert, and that will find a way to get it up and available to you. So tell you what, just sit tight with me, bear with me for a day or two if you would. I will go ahead and definitely be sending you all out an email letting you know exactly how we're going to do that. But we've been working on kind of phase 2 of the website, which I kind of demoed when we first launched PowerCharting.com. Because we wanted to give you guys, it was actually you guys in mind why it was built like that, the opportunity to have a private place to be able to go, have private forums, kind of like I'm looking at doing with that chat room. In fact, that's something I wanted to ask. How does everybody feel about going ahead and having the secondary chat room, which is kind of like just students, of these webinars? So what you can basically do is go into the main channel that you go into. And what will happen is you can just post your trade in the main channel, but then all of the indicator stuff you use to get to that point, my price action, like next week, the key setups that you'll learn about, people won't necessarily, who haven't taken the time to commit to us like you have, won't necessarily be privileged to all of that background information, but they'll see, okay, wow, you guys are doing a great job with what you've learned, but the underpinnings, the specifics, the specific moving averages, the specific indicators, the specific stuff, maybe that gets more talked about in a private password protected chat room for just you guys. How does everybody feel? Robert, I don't know if you can let me know.
I'm seeing all yes, 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 they want it. No one's saying no, don't do it.
Okay. Well, great. We're going to start working on that for you then, and we'll let you know, exactly how we're going to go ahead and do that for you and what the password would be and everything else. So, that being said, I think we're going to go ahead and call it a day here. I can't thank you all enough, for being part of this first group mentoring session. And that means a lot to me, which is why I try to dedicate the extra to you.
Yeah. Can we cover a couple of quick technical questions? One is, do you use your charts and trading execution platform all on one computer? Do you use multiple monitors?
No, I try to go at, because I travel a lot. I haven't traveled a lot since January of this year. Last year I was in Amsterdam a lot and in different places of the world quite a bit, and I like to travel a lot. I try to keep everything to one computer so that I can be mobile, because when I'm away I think about trading, and so usually when I'm on vacation I still like to go and bring my trading computer so I can get a little trading done, and so I try to keep it all to one computer.
Okay, and do you manually enter your orders, or do you have an order entry program or something?
You know what? I use the Infinity AT platform, and it's just it's an awesome platform. I told you guys, as you all know, I'm not paid or compensated by these guys, over there, but I've been with them for years. I don't get any payment for order flow or anything like that for people to go ahead and trade with them, but I strongly recommend them because, they've been nothing but wonderful to me, the people I've sent to them. Everybody's saying the same thing. They're doing a great job for you guys, and so there's a free demo website link available off my website if you want to download their platform, because it automates. You can set it all up and it automates all that stuff at the click of a button for you. It's very nice to use that platform.
Okay, there's one question. Rick, who can't make it to next week's webinar, wanted to know, is it possible to purchase it? And even if he's not there, can he get the video of it? And I also know there are a number of people that signed up for today that aren't here.
Right. Yes, they signed up for today, and they specifically asked me in advance, hey, could they go ahead and be, still get the video? And they actually signed up and they purchased it. I wish they could have been here live. That would have been great. But that's not a problem. Anybody that's a student, anybody that's shown that loyalty and that desire to be part of, what we're trying to accomplish for everybody here, I want to help them out, obviously, in advance, which is why I do these little extra things as I can for them. So, yeah, certainly, if somebody can't be there for next week's meeting, if they're a student already, they're certainly welcome to go ahead and purchase, the video next week. That's fine.
Okay, and Jeff wants to know if you'd consider doing a webinar during trading hours.
Yeah, actually, Jeff, I am considering doing a webinar during trading hours. That's one of the reasons I'd actually mentioned to you that I wanted you guys to kind of get familiar with some of these indicators and stuff, so that when you do actually see the stuff live, when I start shooting out numbers or I start saying, oh, this primary pivot and this, you're not so lost. You'll kind of be with me when I'm doing it. But I'm definitely looking at doing some live things as we go forward.
And the last question I have is Carl. He wants to know where you have your support and resistance lines on eSignal. Are you drawing those manually, or are you importing them somehow off of your
Nope,
list of numbers?
those are manually drawn on there. I'm still old school in that fashion. I like to ultimately put them onto my channel or onto my chart, excuse me, manually. Again, that keeps my feel of the market. It keeps me knowing exactly where the levels are, because when it's done automated, you tend to get a little bit lazy. So I still like to do that kind of old school where I manually put them on there myself.
And Vishay asks, what's your trading size range between, let's see, between 50 to 75 or more than 100? I don't know, contracts, I guess.
Well, it certainly is a personal question, but it's way up there. Yep. It's over your 50. I mean, so, from day to day, there are days where I will do far less than that. I told you there's days where I don't feel comfortable trading size, and there's days that I feel very comfortable trading size. So expect it, as it has been, as it will be going forward. The trading sizes will vary from day to day based on my risk tolerance, and I kind of denote that sometimes. If you notice my daily and my nightly commentary about my my risk feel, my feel for I talk about keeping keeping the contract size small, using half size, kind of quarter size. You've probably seen some of the comments I've mentioned on it, so you get a feel some days where I'm not feeling the the risk tolerance that day. So, all right.
Are you going? The last one. Are you going to ever cover the psychology of trading? How you overcome fear when the market moves against you?
Oh, absolutely. That's huge. Some of that I think we'll discuss in the open sessions. Where people want to talk about their personal issues and how do you, hey, I have this experience. How do you deal with that? I think the open sessions will be really great for discussing psychology, so people can talk to me about their specific issues, and I can talk to them about, well, yeah, I've had that, and here's how I dealt with that. So I think that will be, a great conversational piece for the open sessions. If not, if people don't want to discuss it there, I can maybe do a formal psychology webinar down the road. But I think it's a great one for people to be able to open up right there in the open session and talk about their issues.
Okay, that's all the questions we have.
Okay. Well, Robert, thank you for going ahead and moderating this. And again, in closing, thank you to all of you. And that's why I wanted to say I really appreciate you all being here, taking the time to be with me, and being part of this whole process. You guys are all great, and that's why we have done and will continue to try to do the little things that show you that we care in return. So I wish you all a fantastic Saturday, and I can't wait to see you guys all Monday. Okay? Take care, everyone.
Muted.